All right, everyone. Hope you're all doing well. Hope everyone is getting on well. It's nice to see everyone here. There's a good few people already kind of coming in, and I really appreciate that. Just gonna get the slides loaded up, guys, and we're just gonna wait maybe a minute here, just so that everyone can come in. Really nice to see you. I see some familiar names here, so thank you very much for joining, guys. I very much appreciate it. What I would like is if one of you could just say, or anyone really could just say, if they can hear me okay, the audio is okay, because this is quite a long session, so it's important to be aware whether you guys can actually hear me fine. I'm sure you can, but I'm really sort of cautious with this because many years ago I did a live session, and funnily enough, I had the microphone turned off, so I was just talking to myself for 2 hours. So if you guys can just tell me you can hear me okay, you can see everything okay, everything's completely fine, I have nothing to worry about as your host, and then we'll get cracking. All right, guys, it's really cool to see you all. I want to say a big thank you for turning up for this session. The numbers are pretty good. The good thing about this session is, of course, it will be recorded and it will basically be uploaded to YouTube live straight after this. Okay, so if you go into our channel and you go into the live section, you will see this in there. Okay, so you'll have the full copy for free. There's no paywalls associated with this or anything like that. So you'll have access to the full copy. The last one had I think roughly 10, nearly 10,000 views. I think it's at like 9,000 now. So hopefully we'll get it to 10,000. This one will be hopefully a special one. Okay, so let's get started. And I just want to say again, thank you so much to everyone for turning up. And the next few hours are going to be really interesting. We're going to look at some really relevant theory for the upcoming SCS exam. And hopefully this makes all the difference in your exam. I'm hoping that you pass. Okay, so guys, and I just see, all right, there's some familiar names in the chat. You can see here I have multiple monitors, by the way, which is why I'm sort of flicking backwards and forwards between different screens. So look, just a small bit about me, okay? I don't want to waste too much time on this, but look, my name's Hugh Martin. Maybe you've heard of me, maybe you've seen me. I don't know if you have or you haven't. The best place to find me these days is probably LinkedIn. This is where I spend most of my time. You see me on LinkedIn, you see me on Facebook group sometimes. You see me on the FLP, my own site, CIMA programs. If you're based in the United States, maybe you see me on a special CIMA program. If you're based in China, maybe you've also seen me on a certain program over there. Just a bit about me. Look, I'm fully CIMA qualified myself. I've done all of the case study exams. I was a prize winner for the OCS. I was second in my country for the SCS. I know what it's like to go through these exams. It's not easy, is it? I mean, I have done this, and it's very, very, very tough. It's very tricky. So I'm not speaking at you, I'm speaking with you, okay? So I have been in your position. I've traveled the journey that you're traveling, and hopefully that will come through in the materials, okay? I reach thousands globally. I mean, there's no secret. We know we have tons of views on our videos. We have over 150 students in our course this time around for this window, and I'm hugely honored by that. I never thought it would be that big, but it is, and we're hoping to get it even bigger. I've also written a textbook on the SCS, and I assist CIMA with various different international projects on this subject. I know quite well. I know the other case studies in the objective papers quite well too, so I work on those, but not with my own platform at the moment, Pro Accountancy. I own the business Pro Accountancy. Maybe you've heard of it, maybe you've seen it, maybe you haven't. Hopefully you now know about it. We're an official CIMA tuition provider based in Ireland, but we serve people all over the world. Okay, so what we're going to be looking at here is some highly testable theory areas for accumulator. And what you're going to see, just so you're aware, are some lesson references for each of the theory areas that we are bringing up, okay? And those lesson references relate to the lessons that you can get on the course. So if you're on a course with us, they basically refer back to those key areas, okay, within the course. So you can get more information on those. I know some of you are not course purchasers, that's okay. But if you are, then you can find more information on that topic by just following that reference, okay? So this lesson, this part of the lesson is going to look at core activity A, then we're going to go through core activity B, then C, then D, and then E. So this is quite big, so we're going to rush through some bits, okay? But you have a kind of a full copy of this within the course that's a little bit slower, okay? So core activity A, what is core activity A? What is a core activity actually before we get stuck into this? So basically a core activity is effectively a major syllabus area. Okay, so there are 5 core activities for the SCS, and for each core activity you have a series of assessment outcomes. So assessment outcomes are basically the core activities broken up into smaller details. So we have here, I can evaluate strategic options, digital and otherwise. I can recommend strategic decisions, digital and otherwise. I can evaluate potential acquisitions and divestment opportunities. I can recommend responses to opportunities and threats arising from digital technology. So those are the assessment outcomes, and that's the core activity A there. Really all about enterprise strategy. Okay, so what do we need to know in relation to this core activity? Well, the first area is acquisitions. Okay, so acquisitions is a big piece of the SCS. You can see from the past papers, you don't have to take my word for it. It comes up over and over and over again. But what do we need to know in relation to it? Well, we need to be aware of how to evaluate an acquisition. Okay, so the factors to consider. Okay, so the various different factors that we would consider before making the acquisition. So, for example, synergies. Will we be able to generate synergies from this acquisition? Does it make sense? Is there commercial logic? Okay, is this going to increase profits? Is it going to be something that gives us access to maybe strategic resources? Strengths and weaknesses. This is like kind of an easier one. You may get a question asking you, what are the benefits, the drawbacks, what's the arguments for and against this acquisition? I mean, that's kind of a little bit more straightforward, right? I mean, you need to kind of take into consideration the scenario, but some typical strengths could be, again, access to a unique asset, could be access to skills, could be maybe access to a certain market. There may be the generation of shareholder value. I mean, that's like a little bit more kind of easy, simple, that one. The next one, then, weaknesses. So what would be, possibly a weakness associated with the acquisition? Well, one that you can kind of use for most acquisitions is the potential for a diversion of board focus. Okay, so the board would be focused on a series of issues, and in our case, as accumulator, they're focused on EVs, electronic vehicles. But it may be the case that they might be distracted if we, for example, purchase a lithium mine or something like that, which is in a different industry. Commercial logic is really all about thinking about the revenue generation and the potential cost implications of an acquisition. And commercial logic came up before in the exams for our field, which is an old case study. And I think it would be revitalized, okay? So I think it will come back into your exams eventually. Suitability, acceptability, and feasibility. I mean, this is like everyone's favorite topic, right? So SAF, everyone knows suitability, acceptability, and feasibility. Everyone's hoping it'll come up in their exam. It may not come up as blatant as this, but you may be asked to evaluate an acquisition from the perspective of these 3 different criteria. So suitability, is it a strategic fit? So think about alignment with the mission, alignment with the vision, alignment with the values. Does it help us to improve our strengths? Does it allow us to leverage an opportunity, deal with the threat, deal with the weakness? Okay. Acceptability is about the acceptability to our stakeholders. Okay. So typically we think about shareholders. Does it generate a sufficient financial return? Is it in alignment with their risk profile? And does it meet the needs of the government as another stakeholder group? And then feasibility is about resources. So do we have the skills? Do we have the finances? Do we have the right culture for this acquisition? Okay. Acquiring versus organic. This hype of theme has come up in the exams before, okay? Should we acquire a business or should we basically start one ourselves, okay? So when you acquire a business, of course, you gain rapid entry into that line of business. It's all about speed when you acquire, and you may acquire things like a brand, which take a very long time to develop. But of course, when we start our own business, there's less risk associated with possibly there being issues with that entity. Let's say, for example, we purchase a business and the staff leave, almost instantaneously. That's a risk that can occur, okay? And that has actually kind of come up in the exams before. Post-acquisition issues, okay? So typically when we're talking about post-acquisition issues, you may have some questions around post-acquisition governance, which is more so covered under core activity E, which we will get to eventually. Post-acquisition issues from the perspective of core activity A more so relate to the strategy, okay? So should we have managed the acquisition better, okay? So that question has come up before in the past. Resource audits. So this came up in the most recent set of exams. I actually had this in the last crash course. We said that this could be tested under core activity A, and it did, okay? It was tested. So a resource audit is basically just assessing, okay, what resources do we have? Okay, so do we have skills? Do we have finances? Do we have the right culture, as we said, for an acquisition. Okay. So the next piece, and you'll see me kind of watching different screens here. I have multiple different monitors up. Okay, so I'm not I'm not looking at my phone. I'm just looking at different monitors. I have a chat box on one, if the presentation on the other. Okay, so divestment is the next piece. I think you could see maybe this coming in because there are various different factories for accumulator, and it lends itself quite well to a divestment type scenario. So again, evaluating a divestment. So thinking about and assessing a divestment. So what are factors that we consider? Well, the first is the use of the funds. Okay, so if we divest of a entity, what are we going to do with the funds? Another thing to consider is how are we going to replace the profits and the revenues generated through that divestment. Okay, the strengths and the weaknesses. So again, you're thinking about the pros and the cons associated with the divestment. It's actually quite similar to the factors to consider. So a main strength of this could be getting rid of a loss-making or maybe a kind of a draining entity. Okay, so maybe there's a car brand that we have that doesn't really add much value. It's draining our resources. We're getting rid of it, and we're releasing some funds that we can use to reinvest. The weakness, though, is that you may have to replace the profits that were being generated, and you may have to do it quite rapidly. Otherwise, it looks as if the business is kind of staggering in terms of its profits. The commercial logic, again, think of the profits, the costs, the revenues associated with the divestment. Suitability, acceptability, and feasibility, you could also be asked to apply this to a divestment type situation and the implications, the consequences of the divestment. Okay, so think about the strategic consequences of the divestment. You could also have a question around acquiring a divestment. This came up before, where there was a question around whether the fact that an entity is a divestment of another entity should be a factor when we're looking to purchase it. And the answer is yes, to an extent. Okay, so the fact that it is a divestment of another entity, it may actually insinuate or suggest that it has maybe issues. Possibly there's a reason why they're divesting of it. And then, of course, on the other side, we need to consider there's more factors that we need to take into account than just the fact that it's a divestment of another entity. Okay. The next is the types of strategies. So this has come up more in the exams, and I think it's one that I would pay close attention to for this upcoming exam. The formulation methods, okay, of putting together a strategy. So you've probably seen the emergent approaches come up more in the exams, and the question typically, if it is being examined on the emergent approach, tends to focus on whether a certain strategy is indicative of an emergent approach. Is this an emergent approach, or is the emergent approach suitable for the business? Okay. And what I would suggest in terms of the emergent approach is that basically the emergent approach is where we have a kind of an initial strategy, but actually we pay attention to the markets, and then we basically change our strategy to match what's going on in the external environment. Okay. So, for example, a great example is a company like Pfizer. Okay, so Pfizer had plan, let's say going into 2020, and then COVID occurs, and then they sort of go, okay, well, our external environment is changing rapidly here. We need to take advantage of the situation, and that's what they did with their emergent approach. They created a vaccine for COVID. Okay, so that's a great example of an emergent approach. I mean, is it suitable for accumulator? To a degree, okay, to a degree. Of course, the drawback of the emergent approach is that you run the risk of kind of drifting off into various different strategies and falling out of alignment with the overall mission and vision of the business. Okay, the next one is the rational model. This is basically where you put together a strategy in a formal way. You sit down as a team, you come together, create a strategy, and then you stick to that strategy sort of no matter what, right? Kind of a fixed way of putting together a strategy. It's not always the most suitable. Freewheeling opportunism is where you basically take any opportunity that arises, okay? And this is a very appropriate strategy for a very small and young business, okay? So like a very small startup business, but for an established business like Accumulator, it wouldn't really be appropriate. In terms of logical incrementalism, this is basically where you have every single year just basically improving upon what you did the prior year. So a great example of this would be like a local laundrette or a gym, right? They're not going to do too many things that different in the next year. They're just going to slightly improve upon it, okay? Now, you may get a question around recognizing whether a strategy constitutes differentiation cost leadership, or focus. Okay, so you may be given a strategy the accumulator is seeking to implement or use, and then you're asked the question, okay, is this indicative? Is this basically differentiation, or is this cost leadership, or is this an example of focus? Okay, so differentiation, is it creating a perceived difference? Okay, cost leadership. Okay, when we think about cost leadership, is this helping us to become the most effectively cost effective producer in the market? And focus is all around kind of honing in on a niche, okay, so a small market. And then with that small market, we can kind of target them with cost leadership or differentiation. Okay, so again, it depends on the nature of the strategy that's actually presented to you. So strategic matters is the next one, recognizing strategic issues. You may get a question around whether something is a strategic issue. Okay, so whether it constitutes a strategic issue. So what I would consider is the timeline. Okay, I would also consider the impact and stakeholder perceptions. Okay, so when we're looking at an issue and we're trying to decide, okay, is this strategic or is it not? Try to think about the timeline. So we're thinking here about whether it has a long-term impact on the business, and that kind of gives us some idea as to whether it is strategic or not. The impact, okay, so typically strategic matters have a considerable material impact on the business. Okay, so does it have a considerable material impact? And stakeholder perceptions, okay, we need to think about, well, what would stakeholders think if we didn't address this as a strategic issue? Okay, so again, that kind of gives us a clue as to whether it is strategic or not. Okay, the next one then, so justifying decisions to shareholders. So you may get a question around whether we should be justifying strategic decisions to our shareholders. Now, this is a really interesting question because what it is effectively testing you on is, should you be, I suppose, rationalizing everything to our shareholders as you go, as the board of directors? Okay. And what I would suggest is try to think about it logically, okay? So it sounds like a good idea, having that communication with our shareholders and, justifying all the strategic decisions that we're making as a board. But try to think of the perception effects of that. So if you are a board of directors and you're making decisions and then you're rationalizing all of those decisions and kind of justifying them with our shareholders, the perception is that, I suppose, really the board has no use. Okay, they're effectively kind of being led by the shareholders, and that's not a very strong position to be in as a board of directors, right? If you're always trying to sort of seek approval from shareholders on everything that we're doing, there may be a bit of confusion from a stakeholder perspective as to who really runs the business. Okay, so the board's role is to kind of drive the operational performance of the business. It's not the shareholders' role to do that. Feasibility as well. We need to think about the fact that it's not always feasible to approach shareholders. I mean, a company like Accumulator could have thousands of shareholders. So how do we do that? Do we, have an AGM every time we have a major strategic decision? It's just not really feasible. And the effectiveness. You're not going to have a very effective board if they're constantly trying to justify every single decision with the shareholders. Now, I know some of you are thinking, where's this in the syllabus? Well, this is something that has come up before in the past. And again, that's why it's so important to be tuned in to the various different questions that can appear and the scenarios that may come up, because the way in which theory is tested for the objective tests and as well under the FLP competencies is very different to the SCS. And that's effectively why I have a business. Okay. So the next then is the mission, the vision, and the values. Okay. So this is a really big piece of core activity A. It's highly testable. I think it could come up in your particular exam, and typically the question will be as follows: evaluate a strategy's consistency with the mission, the vision, or the values, or it could be all three, or it could be two of them. Okay, so evaluate a strategy in terms of its consistency with, as I said, the mission, the vision, and the values. And what I would suggest is, as much as possible, try to spot where there is some consistency and when there is some inconsistency. Okay, so try and incorporate both within your answer. Sometimes it's not possible to do that. Sometimes it is possible to do that. Okay, more often than not, it is possible to get both in there. So try to take a broad and complete perspective. Okay, so try to spot the potential inconsistencies as well. You may be thinking to yourself, well, how do I do that? Well, in the case of the values, there's multiple values. So it may be the case that a strategy is consistent with some of the values and maybe not consistent with a few other ones. That's a little bit more straightforward. With the mission and the vision, it is possible to break them up into smaller bits, and then you can kind of see, okay, is it in alignment with this bit? Is it not? Is it in alignment with this bit? Is it not? Okay, so break it up a little bit. Now, adaptations as well. You may get a question that asks you, could we adapt the mission, the vision, the values? Could we change them? Okay, and the answer is yes. I mean, you can make changes to them, but when you make changes, there is a signal that is sent. Okay, so let's say, for example, we adapt our values. Maybe we add in a new value. Okay, think about the implication of that in terms of the message that it sends to the markets. What if we remove a value? That could send a message that actually we don't care about that certain element of the business. Okay, so you have to be really careful in terms of making adaptations. The values have some influence over behavior, and this has been a testable theme in the past. Okay, so there was a question before around whether the corporate values of the business should have prevented a certain issue from occurring, and I believe it was a quality related issue. And it's a really interesting question because it's testing your ability to understand the role of corporate values within a business. And to a certain extent, yes, okay, corporate values should, and in that case, those values were kind of talking about things like quality. Corporate values should, to a certain extent, prevent certain types of situations from occurring if they're being abided by. However, we have to be reasonable, right? At an operational level within an organization, they're not necessarily going to know the corporate values by memory, okay? Like it's the case that the senior levels of the organization, the board, they have a very clear idea of the values, and they then set strategies and so on in alignment with those values. And then eventually those values are kind of petered down into the organization, and a culture is built centered around those values. But at an operational level, someone isn't sitting there with a list that says, okay, did I do my job in alignment with this value? Did I do it with this value? It's not realistic, okay? So that's something to consider in relation to that question. The next one is scenario planning. So scenario planning was pretty heavily tested in the last set of exams, and it's something that could come up for you. Now, it's not too bad if you get it, okay? The way in which it's examined is not too bad. It was way worse many years ago, okay? So KCTP was where it was tested sort of first, okay, in the SCS, the modern version of the SCS, and there was some really not so good questions, but it has become a little bit better in terms of the way in which it's tested. So you could get a question around evaluating the impact of different scenarios. So you're presented perhaps with 3 scenarios and you have to evaluate the impact. So what impact will those scenarios have? Okay, so obviously your answer is going to be very much specific on those scenarios. The next then is recommending responses to scenarios. So again, you may be given like 3 different scenarios and then you have to recommend your response. So how do you respond to those scenarios? And again, your answer is going to be very specific to those scenarios. I mean, that's how you get a level 3, a high level answer, really, really high quality answer, is you ensure that the scenarios are specific. Okay, your answer is specific to the scenarios. Okay, the benefits of scenario planning. So you may get a question that says, okay, would it be beneficial to carry out a scenario planning exercise? And of course, there's some benefits, right? It helps us to deal with certain situations if they come up. It helps us to think about the various different factors involved in a specific situation. Okay. However, it's not perfect, right? Scenario planning is highly ambiguous. It's high level. It's not precise, and actually, it could end up being a waste of time. Okay, so we may end up spending all this time and money coming up with these responses to scenarios that just never occur. Okay. You could get a question around how scenario planning could be used. So how to put together a scenario plan. Okay, so how do we do it? Well, within our lesson, we go into a lot more detail here in D3, but basically to kind of summarize it, you identify the critical factors associated with a particular decision. Then you create scenarios. Then you develop the scenarios so you can add some detail to them, and then you have some responses to those scenarios. Okay, so let's look at some potential questions here. Now, just bear in mind, within the course version of the crash course, we go into a lot more detail, but I just want to give you kind of a high-level view of these. So these are some of the potential questions you may get. So around acquisitions, evaluate the strengths and weaknesses of acquiring a sodium-ion battery manufacturer. Okay, so this is something we'll actually see in a few minutes. Recommend the factors to consider before acquiring a charging infrastructure provider. So what would we consider before we acquire a charging infrastructure provider? Okay, So there's lots of different things here. Again, synergies. Does it give us access to certain assets? Okay, those are things that I would think of. Now, you need a lot more context here to build out a proper answer, just so you're aware. These are just kind of short brainstorming type questions. The next one, recommend the matters to consider when carrying out a resource audit prior to acquiring a lithium recycling company. Okay, so this question came up before in the past, and effectively what we're being examined on here is, what should we consider? What area should we factor into our resource audit? What should we look at closely? So in the case of an acquisition, we need to think about the finances. I mean, do we have the appropriate finances? Do we have access to capital? Are we able to have, for example, a share exchange that would allow us to purchase this business? Do we have the appropriate skills to make it happen? Okay, in terms of an acquisition. And you could bring in the fact that the company, it has goodwill, so it has likely made an acquisition in the past, so we probably have experience with acquisitions. There's other things as well. Do we have the appropriate culture? We kind of touched on that. I think that's a little bit more difficult to appraise, but of course you could assess that as part of a resource audit. Divestment. So you could get a question like this: evaluate the arguments for and against accumulators' divestment of the tiny brand. So they tried to remove the tiny brand. Okay, so the arguments for and against. Now, typically in a question like this, you'll be given a little bit more background on the brand, like why are we trying to divest this? Okay, like what's the, how has this come about? So that's going to factor in. Okay, recommend whether the fact that an EV brand has been divested should matter when evaluating it as an acquisition. Okay, so this kind of we touched on. We said yes, we should to a certain extent. It may suggest that there's issues with it. There may be problems with it. Okay, that's something that we should consider. But of course, it's not the only factor, and it shouldn't be the sole factor when considering whether we should acquire it. Okay. The next one, evaluate the strategic challenges for Accumulator of divesting the company's Scorch brand. Okay, so the Scorch brand is like one of the vehicles that they have. In terms of the strategic challenges, I mean, the main one is trying to replace the revenues associated with that brand, trying to do that within a reasonable time frame. And as well, I mean, this kind of touches more so on core activity C, but trying to create a entity that we could sell that contains the Scorch brand and all the associated activities that it has, and trying to disentangle things like head office support. Okay, then that could be quite tricky. Types of strategies. So recommend whether the acquisition of a lithium mine would constitute a cost leadership strategy. Okay, so think about cost leadership. I mean, if we were to acquire a lithium mine, I suppose the temptation is to think that, yeah, it's going to help us with being a cost leader, but only to a certain extent, because the mine has to generate revenues, it has to generate some form of income to sustain itself. So it's not going to be able to sell us lithium at absolutely zero. And, it has to pay the staff, it has to run the equipment, energy, and so on. So the access that it gives us to, really cheap lithium, it's limited to an extent. And if it were the case that we were to have like a rock bottom price that it couldn't sustain itself, then the group entity would have to basically subsidize the existence of this mine, which would completely wipe out any cost savings that we have as a result of purchasing the mine. So recommend whether a freewheeling opportunism approach would be more appropriate for Accumulator to adopt. So kind of taking every opportunity and just sort of, yeah, we'll do this, yes, we'll do this, yes, we'll do this, that type of approach to strategy. It wouldn't, okay? So it's not really appropriate for companies the size of Accumulator. There is a very high risk of acting in a way that is not in alignment with our mission and our vision, okay? The next one then, evaluate the argument that an emergent approach should be used when creating digital strategies, okay? So, I suppose you could say here that, yes, it should be to an extent, because in terms of digital technology, digital strategies, things change quite rapidly. So coming up with these types of emergent approaches may be a little bit more representative of the area that we're trying to cover, which is, digital technology, and it is kind of a fast moving area. So it makes sense to have these emergent strategies. However, again, another drawback associated with the emergent approach is that it can result in the company detracting away from its fundamental mission and vision. The next then, strategic matters. So you may get a question like this: recommend whether the establishment of a lithium battery recycling facility constitutes a strategic decision. Okay, so would that be considered strategic in nature? Remember what we said, okay? Timeline, impact, stakeholder concern. Okay, these are the things that we need to consider when we get a question like that. I know it seems a bit strange, like would that constitute a strategic decision, but this type of question has come up before in the past. Recommend whether the ability to alter software used in accumulators vehicles is a strategic matter for the board to manage. And I would suggest that to a certain extent, yes, because this particular issue, and it's brought up in the pre-scene, I mean, it could be quite dangerous, right? So it's something that could lead to significant risks. And therefore, yes, the materiality is high. It's something that the board should manage. But of course, that sort of is limited to an extent because it's not going to be the board specifically dealing with all the technicals. Okay, there will be an operational level, a level underneath the board that's actually going to be responsible for trying to resolve this issue. Okay, recommend whether the board should justify strategic decisions to that should be the shareholders before making them, and we covered that off in detail there when we were looking through the theory. The mission, the vision, and the values. So evaluate the consistency of a proposal to purchase a charging infrastructure provider with accumulators mission. And again, what I would suggest with this type of question is try to consider where there is some consistency and where there perhaps is not some consistency. Okay, so some inconsistency. I think that's probably the best approach. More often than not, you're able to do that. Recommend whether adherence to accumulators values should have prevented an in-vehicle software exploit. Okay, so someone maybe like a cyber criminal has found out how to exploit our software. In this particular case, or actually it could be a consumer. Okay, so they're trying to tweak the software. That kind of comes into the pre-scene a little bit towards the end. You could get a question like this, and I suppose the idea here is to kind of test your understanding of corporate values and how they're used in a business. So to a certain extent, yeah, I mean, had we maybe paid closer attention to our values and acted more in alignment with them, yes. However, we have within our values, innovation, okay? And I suppose to a degree, when you have innovation as a value, you have to take risks. And, by having maybe innovative software, it's not going to be 100% perfect. And as a result, then, we have a little bit of a debate here. Okay, so in terms of adherence to values, so if we're adhering to innovation and we're kind of taking risks and we're driving forward technological innovation, there may not be I suppose 100% protection as a result of that innovation. So again, that kind of creates that debate within your answer. Evaluate the impact of adding an additional core value after acquiring a driverless vehicle software company. So what is the impact of having an additional core value? Okay, it will depend on the core value that's being suggested, but again, it will kind of send signals about what we care about as a business effectively. So the last one there is scenario planning. So recommend the usefulness of performing a scenario planning exercise on the impact of a new law granting tax credits for EVs. Okay, so it helps us to predict the eventualities, and also deal with them as well if they were to occur. But of course, it's not a perfect analysis. And sometimes with scenario planning, you can end up coming up with all these scenarios and them never being used. Okay, so it can be a waste of time and resources. Evaluate the impact of 3 scenarios based on economic movements related to a new overseas operation. And it will depend on the economic movements. This type of scenario came up for rhodamine. Okay, so if you look at variant 6, there is a variant there where we have that as a kind of a scenario planning type of question. Recommend how scenario planning could be used to prepare accumulator for the impact of its driverless technology. Okay, so really interesting question there. So recommend how scenario planning could be used. Okay, so here we're putting together this scenario planning exercise. We're thinking about the various different factors, okay, that are relevant to that particular issue. Okay, this driverless technology. So let's look at a worked example, right? Let's actually get some context here, which I think is really important. So the acquisition of a high-growth Duxton-based startup company called Litcycle is being proposed by the board. Litcycle specializes in the extraction and recycling of lithium from EVs, okay, EV batteries. EV is electric vehicle there. The company has been in existence for 2 years and uses a proprietary method for extracting lithium. Okay, so this is like a unique method. Okay, it's another word there for that. The extraction method is less environmentally damaging than similar methods used by competitors. Litcycle works with accumulators competitors, and the board is considering entering into supply contracts too. Okay, evaluate the argument that an acquisition of Litcycle would be more beneficial than a supply contract, and this is worth 60%. Okay, so what we suggest more often than not, right, this is our exam advice, is as follows in terms of structuring your answer. So it's worth 60%. Okay, so what we suggest is that you have one paragraph for every 10%, add them up and minus one. Okay, so in this case, that'd be 6 minus 1. Okay, so 60%, 6 paragraphs, minus 1, that's 5 paragraphs. And then the second piece of our advice is if you have multiple requirements in the question, you need to split your answer evenly across those requirements. So in this case, we have multiple requirements, okay, because it says evaluate the argument. So we're going to evaluate the argument for and evaluate the argument against. So we have 2 requirements in this case, okay? So the appropriate structure to follow would be 2 paragraphs for, 2 paragraphs against, or 3 paragraphs for and 3 paragraphs against. Okay, so let's look at some potential answers. Now, if you're watching the recording of this, I suggest that you pause and you go through this yourself and then look at this, okay, the solution. So in terms of 4, so one of the primary reasons for the acquisition is that it should assist with risk management, okay? So there's a finite supply of lithium, right? And this is kind of coming from our own kind of research, I suppose, and also from looking at the preceding document. And we're saying here that it's realistic for governments to encourage recycling, okay? There's a finite source of lithium. So this is an alternative source, basically, that they could tap into, right? So governments may mandate or they may put in force a set percentage of recycled lithium to be used in each battery that's manufactured. And this is something that the EU has at the moment, where there has to be a certain amount of recycled lithium used in batteries, okay? If we had a law like this being passed in, the countries that we operate in, it would basically create a sharp demand for recycled lithium, okay, which may be in short supply. So if we're acquiring a company like LitCycle, it protects the company, our company, the accumulator, against this type of legislation. Okay, so this is a point for risk management effectively. So we're saying that you could have this big increase in price and this would protect us against that. And the supply, okay? So the next is shareholder value. So this is a little bit more of a simplistic answer. So another argument for the acquisition is it may generate some significant shareholder value over time. So the nature of the business, if you think about it, is that it solves a major problem for both governments and EV manufacturers, okay? Likely the case that when they're acquiring the batteries that they use in their process, they're probably getting them for basically negligible amounts because they're recycled batteries. I mean, they're not really going to be used for much else. And the company's proprietary extraction method, I mean, it makes it a unique type of business. It has some kind of value associated with it. So with effective management, I mean, the company is likely to grow and generate profits. So the acquisition itself is likely to create some shareholder value for us. And that is effectively what the board should be seeking out, is the creation of shareholder value. Okay. The next is supply. So an additional argument is that it creates a new supply of lithium. Okay. It's a new source of lithium for our business. So in the principal risk report, and this is our incorporation here of the pre-scene, it basically stipulates that interruptions to the supply chain could severely disrupt production, okay? So if we're looking to acquire a business like this, it allows us to take control over a source of lithium supply, which in this case is recycled lithium, but it's effectively the same thing. And it says here, since the recycled lithium is not related to mining, it's unlikely to be subject to the same set of supply-related risks as lithium that comes from mining activities, okay? So lithium comes from, brine mines or spodumene mining. And so it's a way of kind of de-risking. Again, it's kind of touching on this de-risking element. So the net result is that accumulator builds a more resilient supply chain, okay? It reduces supply-related risk exposure coming from lithium, okay? Now, in terms of against, I suppose it kind of creates a bit of a lock-in situation, okay? So if you are acquiring a business like this, it kind of creates an obligation for us to use LitCycle's service for recycling batteries, okay? So this becomes an issue in the event where we have possibly a superior extraction process coming into the market being developed by a competitor. If we were to use that, even though it might be superior, it would be to the detriment of, an entity that we have just acquired, which doesn't really make any sense. Really, it would be better for Accumulator to not carry out the acquisition from this perspective, because we could always then switch suppliers. So if we had a supply arrangement, we could switch suppliers instead of having this burden, I suppose, of an acquisition. Okay, and here we've suggested down the bottom, it could be argued that a supply arrangement may be more appropriate than a full acquisition. The next one is valuation. So here we're talking about the fact that this could end up being like an overpriced type of acquisition. So another argument against the acquisition is that we could end up overpaying for this business. So it's a young business, it's high growth, and the owner as a result may feel that there's a lot of value yet to capture, and they may factor that into the valuation of the business. Okay, they may have a different perspective on the valuation of the business. And the main value in this business, when we're actually trying to ascertain what its value is this process, this extraction method, okay? And the extraction method in many ways is intangible in nature, so it's very difficult to actually get an accurate, quantifiable value on this, okay? How much would you pay for this? And as a result, the difficulty in generating the valuation, it could end up creating a situation where we overpay for this business, okay? The next one is expertise. So an argument against the acquisition is that Accumulator has no real expertise in the lithium recycling industry. So Accumulator has some experience, as we say here, in using lithium to manufacture. However, it doesn't really have any operations in place relevant to lithium recycling. It doesn't have any expertise in this particular area. So you could argue that it's not going to offer any unique value generating insights. Again, a supply arrangement may actually be a superior way of managing this relationship rather than acquiring the business. Okay, so let's have a little bit of a pause, right? Okay, that's core activity A. Okay, and of course you can see my details in the corner. You have my WhatsApp there. Please text me, do not ring me. Because we operate across multiple time zones, it is important just to note that. If you're interested in buying our courses, our textbook, please visit proaccountancy.com. We have lots of stuff there that can help you out for this upcoming exam. And there's plenty of testimonies as well on Trustpilot if you want to check out what other people think about our business. That isn't me talking about my business. Obviously, I'm not objective in this case. I'm just going to go through some of your comments just before we get stuck into the next core activity, which is core activity B. Okay, so this is quite a long session, so I just want to make sure that my voice is clear, okay? So there's a question here. So does there have to be a use for the funds to be able to divest? No, not necessarily. You could still divest and have no use for the funds. And I suppose that it's not really that logical, but it could be the case. And then you may have a situation in the exam where they're used for a share repurchase or maybe like a bonus issue of dividends, and that could be an exam theme, okay? So is it subjective whether you are creating perceived difference or not? Will it be obvious from the scenario? I don't know, to be honest with you. It depends on the scenario. I would suggest that if you create a real difference or a perceived difference, then you have a differentiation strategy, okay? Okay, could you please explain what does evaluate mean in terms of scenario planning? Does it mean pros and cons? No, so evaluate means that you need to assess the situation, okay? So, you need to assess, for example, if you have a question that says evaluate the currency risk associated with having an overseas entity, that particular scenario, what you would do is you would basically assess the various different currency risks. So, we have a currency risk here as a result of, maybe dealing with this entity. We have one over here as a result of translation risk and so on. So that's the key word you're looking for there, not necessarily pros and cons. Would bullet points be better than paragraphs? No, always use paragraphs. Okay, so the key is to use paragraphs. That's what they're looking for. If you look at the examiner's reports from a long time ago, there was one that actually specifically noted that it's better to use a paragraph style format. And something to note as well is that if you look at the official solutions, you'll see that there's a paragraph style format being used. Okay, so I'm going to get stuck into core activity B because, again, this is quite a long session. I don't want to keep people longer than I need to, okay? So core activity B is evaluate business ecosystem and business environment, and this is between 15 to 25% of your exam. But just to note that all of the core activities are represented 15 to 25% of your exam. So the assessment outcomes for core activity B, so I can recommend KPIs that encourage sound strategic management. I can recommend responses to economic, political, and currency risk. And there's there's multiple others, but of course the slide hasn't loaded up. But there are some other ones that, again, it's not too important based on stakeholders and strategic tools. Anyways, look, let's go through the key theory. So political risk, okay? So political risk is the first area that we should be aware of. I think it's highly relevant for accumulator. And what do we need to know in relation to political risk? Well, the drivers of political risk, okay? So this is really important. What actually creates political risk, okay? And typically within the context of the SCS, it could be the case that we have maybe an expansion overseas, or we're trying to acquire strategic assets in a certain country. That can create political risk. Possibly developing an existing entity, that can kind of create political risk as well. It's going to depend very much on the scenario. Evaluating political risk, okay, so trying to assess what types of actions the government could take against us, okay. So some examples here: fines, okay, so they could fine us, okay. Let's say, for example, maybe we're looking to expand our operations in a country where there's an entrenched domestic supplier of vehicles, okay. Maybe the government might take action against us, basically in order to kind of protect that domestic industry, something like that. They could have fines, they could have restrictions in terms of importing and exporting. There could be forced recalls, okay, so recalls over things like technology and quality and so on, and things like tariffs, okay. Are you expected to be an expert on tariffs? No, you're not, okay, in terms of the SCS exam. But they are a current issue, and I reckon they were an issue around the time this exam was being written. So I think they could be possibly something that might factor into an exam around, as I said, political risk. So managing political risk, how do you deal with this type of risk? Well, some suggestions here. Again, it's going to depend very much on your scenario. Things like government funding, okay. So if you receive funding from the government, you effectively become a partner with the government, okay, and that's quite important, okay, that's quite significant. And it could be the case that if you have that kind of close relationship, like for example the Chinese government and BYD, they may be less likely to take adverse action against you, because I suppose it's sort of hurting their own interest. Disclosures, okay, so disclosing certain things like safety test results and so on, that can be a really useful way of dealing with political risk and kind of giving some assurance to governments. Lobbying, okay, so actively engaging with and advocating for certain issues, so engaging with the government and advocating for things. I mean, that's really what lobbying is all about. And you may get a question around the maybe arguments for and against lobbying, or maybe you might actually get an ethics-based question on lobbying, which has happened at least 2 times in the past. So ecosystems, okay, so ecosystems is an important area as well. It has been tested a good few times, and typically people tend to answer this quite poorly, okay. So, I would suggest that this is one that you spend a bit of time on. Typically the questions around ecosystems tend to be quite big, okay, so that's something just to kind of bear in mind. Now, you could get a question that says, evaluate the impact of something on the ecosystem, or evaluate the impact of something on the business ecosystem of accumulator. That style of question has come up before, and effectively what this is asking you is how does this development affect the whole ecosystem? Okay, so again, it's going to depend on the development, but let's say, for example, it's something like the release of an autonomous driving feature. So where basically a vehicle can drive itself. It doesn't necessarily need a driver. Okay, and we probably know some examples of this. BYD have this, Tesla have this. And you could get a question, okay, evaluate the impact on our business ecosystem. Well, it could increase competitive forces. So we release this feature. Well, now our competitors are likely to release this feature as well to kind of keep pace with us. Okay, so that's going to increase competitive forces between the various different EV manufacturers. You may see some entrants. So you may see the entrant of, for example, a sensor provider that enhances this feature. You may see software companies coming into the ecosystem that actually provide this type of software for EV manufacturers that are not going to develop it themselves. You may then see the exit of companies that fail to keep pace with this development. Okay, so you could see that as well. You could see a change in the role of a regulator. Okay, so the regulator there is to kind of set the rules, the laws, the regulations, and so on. The role of the regulator will probably change once we have the release of this feature. They're going to be more active in trying to manage various different EV manufacturers and how this feature is being tested, how it is being controlled so that the citizens of that country are safe. Okay, you may get questions, and this has come up once before in the past, but it was a really, really tough question around the challenges in managing an ecosystem. Okay, so we have an ecosystem, lots of different parties, a network of parties effectively coming together to kind of create a solution. What are the challenges in managing that ecosystem if you're accumulator? Well, one of the big issues with managing an ecosystem is that a lot of the factors within an ecosystem, a company like Accumulator is not going to have much influence over them. So we talked about the fact that, let's say technological developments, they could change a business ecosystem, but the degree to which Accumulator has influence over those technological developments is limited. The pace of factors, okay, so the pace of, for example, technological developments, technological innovation, again, it's so fast that it can become very challenging to manage this. Okay, so let's go back to the example of the driverless vehicle feature, right? We release that feature and then another company releases a feature that's even better, and then another feature that's even better than that. That pace of technological innovation is very tough to manage. It could be the case as well that we have a business ecosystem that spans across multiple different jurisdictions, which is the case likely for Accumulator. And that can create a bit of complexity in terms of managing the ecosystem, because if, for example, you have regulators in multiple different countries, that's going to have a very complex impact on the overall ecosystem because they have different rules in which EV manufacturers can operate. The next is currency risk. Currency risk tends to create a lot of problems for people. I think it's like most people's nightmare test area, topic, key area, whichever you want to call it. And as well, I think ecosystems and interest rate risk. So core activity B tends to be a bit of a problem for people. Okay, so in terms of currency risk, what do we need to know? How to evaluate currency risk? How do we measure currency risk? Okay, so how do we go about this? One way in which we can do this is to look at historical data. So if we're looking at, for example, the D dollar, and let's just take a fictional currency like the S dollar, we're looking at this over time and we're seeing, okay, over the last 10 years, has there been much volatility between these two currencies? And if we can see that over 10 years there really hasn't, then there's a kind of low level of currency risk there. Again, historical data, it has its limitations because things can change in the future, but it is one way in which we can try to assess the amount of currency risk that there's going to be in a certain situation. Hedging tools are another sort of answer that we can have here. And what we're saying is that we can actually use hedging tools to try and gauge the degree of currency risk there is. Okay, so yes, we can use hedging tools to manage currency risk, but you can also use them to assess currency risk. Okay, so for example, if you get a quote for a forward, that's going to tell you what the expectations are in terms of where the rates are going to be in the next few months. Okay, so that's going to give us some idea of currency risk. The international Fisher effect is another way in which we can try to measure currency risk. Okay, so this is basically looking at the differences between interest rates between two different countries, the nominal interest rates. And effectively what it's saying is the country which has the higher nominal interest rate should see its currency depreciate relative to the country with the lower interest rate, because a higher interest rate suggests that that country has a higher level of inflation. A higher level of inflation suggests that its currency will depreciate relative to that other country's one. Okay, that's basically a highly simplified version of the international Fisher effect. In terms of using it to measure currency risk, well, we can look at the different interest rate differentials between the countries that we operate, and that could maybe be used to assess the amount of currency risk that we have. Now, what I would suggest is that this is semi-useful in the long term. It's not that useful in the short term because you can have speculators come in and there could be like rapid movements as a result. Okay. The next one then is managing currency risk. How do we deal with currency risk? Okay, acceptance is one strategy, but of course you need to make sure that your strategies are very much specific to the scenario. Okay, so make sure that your answer is specific to the scenario. You're going to be sick of me saying that, okay, in this crash course, but it is really important that your answer is very much aligned with the scenario. In some cases, it may not be possible to accept it, okay? In some cases, it may be. Okay, so just accepting the currency risk. Now, you'll have to give a bit more detail on that. Okay, you can't just say, yeah, we accept it and that's it. Okay. Okay, give a rationale as to why. And typically it's because the cost of managing it outweighs the benefit. Okay, internal hedging techniques, so invoicing in home currency, leading and lagging, these are ones that you could use. And external hedging, there's a different range of tools that you can pick from. I suggest knowing what a forward is and knowing what an option is. I think those are the two easiest ones to talk about. That tends to be the case for people sitting this exam. So that's what I would look at. The next piece here is on interest rate risk. Okay, so interest rate risk. And what are we being asked here? Well, the detail is in relation to evaluating the risk, okay? So assessing the risk. You may get a question as well on evaluating the impact of, let's say, interest rate increases or interest rate decreases. Now, it's more likely the case that you're going to get a question on evaluating the impact of an increase in interest rates. I suppose it's a little bit more exciting. So if you're asked the question, okay, evaluate the impact of increasing interest rates. Let's say, for example, it's in Duxland. Well, try to think about the effect that that would have on finance costs. Okay, so finance costs are basically interest. Okay, so interest that we're paying, and that's going to have an effect on that. But also think about the broader aspects of increases in interest rates. Okay, so an increase in interest rates should also have an impact on demand. Okay, so if you think about vehicles. Okay, so when we go to purchase a vehicle, I mean, a vehicle like a new EV is quite an expensive thing to purchase. Okay, and remember as well that you always have that alternative of the ICE vehicle, internal combustion engine vehicle, that is cheaper. Okay, you have that alternative there. It's important to consider that if, for example, we have an increase in interest rates, typically that tends to decrease the amount of income that people have within that country. Because if you have higher interest rates, you have higher amounts that we have to pay on credit card bills, we have higher mortgages, we have higher car financing that we're paying. I mean, think of all the things that are related to interest rates. So if you have less income and you have an expensive item like an electric vehicle, it could really impact our demand. Okay, and that's something that if you could incorporate that within an answer, that's something that would be indicative of a kind of a level 3 answer, a very sophisticated, high quality answer. Currency movements as well. We talked about the international Fisher effect. So, how that kind of comes into it. So you could get a question around managing interest rate risk. It has never been tested before in the past. So, I don't know how likely it is. It's kind of the question I think everyone is dreading, right? It's like a really difficult question. How do we manage interest rate risk? What I would suggest is try to think about acceptance again. So just simply accepting the risk. There may be in the scenario some reason to believe that it's easier just to accept it. Like, let's say, for example, it's over a very long time horizon, and it may be the case that the risk ends up evening out over that time horizon. And it may be, again, useful to understand a technique like a swap. Okay, so swaps are quite a useful one to remember because swaps can go into very long time horizons. Okay, so it could be appropriate for a business that has raised, let's say, a 20-year loan or a 30-year loan or something like that. And then you have others. So there are some other techniques that you can use for managing interest rate risk. A good one to have maybe would be an FRA, so a forward rate agreement. That's one that's on the syllabus. I recommend just having that in your back pocket. If you have a question on interest rate risk, you could end up using it. Okay, so the next one is stakeholders. Now, stakeholders is a little bit more straightforward. This is under core activity B as well. And you could get a question around identifying different stakeholders associated with the situation. Try to think about the most obvious ones. There's no marks for trying to pick niche ones. Try to pick the most obvious ones. Okay, so stakeholders that are interested in a particular situation or affected by a particular situation. And you could get a question around evaluating the impacts. Okay, so the impacts to those stakeholder groups. Okay, and this is going to be very much dependent on the scenario. You could get a question around the challenges in evaluating the impacts or the challenges in using stakeholder analysis. So when we say stakeholder analysis, we're talking about looking at the level of interest that they have and the level of power that they have. Okay, so just to give you one example of this, I mean, one challenge is that sometimes it can be difficult to actually assess how interested a stakeholder is in a certain issue. Okay, so for example, around sustainability issues, it can be very difficult to understand. I mean, to what extent customers care about certain sustainability issues. Our customers are obviously an important stakeholder group. Okay, so recognition, and this is based on a question that came up before around whether we should recognize different parties as a stakeholder group. Okay, so in that case, there was like a fringe protester group, and there was a question around whether we should recognize them or not. Okay, if you do get a question like that, try to think of the definition of stakeholders. Okay, so a party that has an interest in a company or a specific issue. Okay, so again, it depends on the context in which you're thinking about stakeholders. So the last one there, so measures and tools. So this is kind of a catch-all one, okay? You could get a question on PESTEL. Now, most people tend to think that like you'll get a question and it asks you just to carry out a PESTEL analysis on the company. That's not really the type of questioning that you get within the SCS. With PESTEL analysis, what's more likely to come up is the use of PESTEL analysis to try and predict whether something will happen or to try and assess a certain situation, okay? So could we use PESTEL analysis to try and predict whether a certain piece of legislation will be passed in the Dutchland Parliament, for example? Okay, so you won't really get a question asking you just carry out a PESTEL analysis of the business. That's why I don't really include those in our tuition materials. I don't think there's much value for you guys. Same thing with the SWOT. Value drivers. Okay, so this came up before. What creates value for the business? You could get a question around how certain decisions, proposals, strategies impact the various different value drivers of the business. The SAT framework, we all know this one really well. Strategic measures. So it may be the case that you have to create new measures. Maybe we've just purchased a business and we have to create some measures to try and gauge how effective our post-acquisition strategy is. You may get a question that actually is looking for you to improve existing ones. And I think it is reasonably likely that you're going to be presented with a series of sustainability measures, and you will then have to critique them and challenge them and come up with ways in which you can improve them, because that came up before for the pre-seen hot air, where basically you were given some measures and some information on sustainability and you had to basically improve the quality of it. Okay, so some potential questions. So the first area here is political risk, okay? So the political risk questions, what could we be examined on? So recommend the approach to deal with political risk arising from a fault in accumulators' vehicles. Okay, so recommend the approach to deal with political risk. So basically, how would we manage political risk arising from a fault in accumulators' vehicles? So with that type of question, you have to kind of come clean to the government, the regulator, and say, yes, it's a problem, likely initiate something like a recall, okay? Evaluate the political risks of acquiring an EV manufacturer in an overseas territory, okay? So possibly, again, there's like an entrenched position that the government has. They don't want us to carry out this acquisition. Again, the scenario would kind of give us some more information about that. It could be the case that they try to make our lives very difficult, launching tax investigations. It could be the case as well that they have restrictions on things like imports and exports. Those would kind of be the standard ones. Okay, there may be, again, tariffs, probably a little bit less likely. Recommend how the political risk associated with accumulators driverless vehicle feature should be managed. Okay, so this whole theme of driverless vehicles, I think it will come up. It's kind of like a hot theme at the moment in relation to EVs. So you can see here it's kind of factoring into lots of different questions. How do we sort of deal with this? How do we manage this? Well, you could reach out to the relevant authority. You could give them some information about how we're testing this feature. You could offer some assurances. So in the real world, companies like Waymo and Tesla, what they do is they have geofencing. So the vehicles can only go so far. Okay, they can't go all over the United States. They can only go within a certain area, and that kind of restricts the damage that they could do. So ecosystems is the next one. So evaluate the effect that driverless vehicle technology will have on accumulators business ecosystem. We talked about that. Evaluate whether the creation of an in-vehicle application market ecosystem creates a competitive advantage. So this type of question is interesting. It's really examining you on competitive advantages, not so much ecosystems, but the term ecosystem is used to try and throw you off, okay? So this type of question, it's based on a real world situation where we have in Tesla vehicles a marketplace where you can buy functions and apps and so on. And the question is saying, does it create a competitive advantage? So to a certain extent it does, but it depends on the way in which it's initiated. So does it create, for example, a series of functions or apps that cannot be accessed on another type of marketplace? okay, then yes, it does create a competitive advantage. If those apps are available in another vehicle, I suppose, or another brand, doesn't really create a massive competitive advantage. So, evaluate the challenges in understanding and managing Accumulator's business ecosystem. So, we touched on this question, okay? Understanding and managing the business ecosystem, okay? So, understanding, sometimes it can be very difficult to understand the business ecosystem. There's lots of different factors going on. As we said, for example, things like the role of technology, technological development, the pace of technological development is kind of a key one in regards to Accumulator's industry. Now, currency risk. So, recommend the approach Accumulator should take to evaluate the currency risks of opening a factory in Ireland. So, notice the way in which this question is worded. It's very CIMA-esque, okay? So, recommend the approach that Accumulator should take to evaluate the currency risks of opening a factory. So, here we're being asked, okay, what approach do we take to evaluating the risk? So, how do we evaluate the risk? Okay, which is actually quite a different question to evaluate the risks, okay? The next one, so identify the challenges in evaluating the currency risks arising from a supply arrangement for semiconductors. And this is based off of a really old exam paper where there was a degree of political risk and political change in the country in which we were acquiring a specific supply. And that then can create a series of challenges for us, okay? So if we have, for example, a new government coming into power with a new agenda, that may create a degree of volatility that makes it hard to evaluate currency risk because we're thinking about currency risks and then we're saying, okay, well, if we look into the past, for example, to see what degree of volatility there was, well, the past is maybe not as relevant anymore because we have this new government that's coming in and introducing a new series of policies that's going to have an effect on the currency rates. So the last one there, evaluate the strengths and weaknesses of raising an overseas loan to finance the construction of a recycling facility. Okay, so this is quite an interesting one. If you are a course customer of mine, there will be actually a session tomorrow. We don't really do many live sessions, but there will be a session tomorrow where we go through this type of scenario in detail. I'm doing like a complimentary free 6-hour workshop tomorrow. If you're interested in kind of getting in on that, you have to purchase the course. Basically just send me an email or send me a LinkedIn or whatever, WhatsApp, and I can, I can add you to it. It's not too late, okay? It's only tomorrow, but again, just kind of throwing that out there. We have a question that actually goes into detail on this, but just to give you kind of like a quick answer, the main strength is that it could kind of, depending on the way in which it's set up, it could be a way to manage translation risk. In terms of the weaknesses, in this case, what are we doing? We're looking to build a recycling facility. Now, if that recycling facility is not actually capable of generating revenues on its own, then it's likely the case that the loan will have to be serviced from the Duxland Central or Duxland Group entity, which creates a degree of transaction risk on the interest payments. Okay, so interest rate risk. So evaluate the impact that an increase in interest rates would have on a strategy to develop a sodium ion battery. Okay, quite an interesting question here. So evaluate the impact that an increase in interest rates would have, so it's an increase this case, on a strategy to develop a sodium ion battery. So if it's the case that we're looking to finance the development of this battery using debt, well, that's going to have sort of a very clear impact on the project or the strategy that we have. That's going to increase the cost. It may actually increase the cost so much, if it's variable rated, that it makes us non-viable. Okay, so that could be a point that you could raise. As well, if you think about it, it's going to affect, as we said, demand, and it's going to affect people's incomes. And if this battery is being used for a niche type of vehicle, which is, again, maybe priced at a premium because it's something that's unique, then that's going to have an effect on the demand for the vehicle that's going to be using this type of battery. So the second question, recommend ways in which the interest rate risk of creating a new factory in Sealand could be evaluated, okay? So this is something we're going to touch on in a few minutes. I'm not going to spend too much time on it here. Recommend ways in which interest rate risk associated with Accumulator's recent debt issue could be managed, okay? So again, think about acceptance, swaps. In the immediate short term, you could think about something like an FRA. Stakeholders. So identify stakeholders affected by a fault in Accumulator's vehicles and recommend how each should be managed. Now, Notice there's a second piece there that's so important. So identify stakeholders affected by a fault. Okay, so we have to identify, I don't know, two, three, depends on the percentage that's allocated, and recommend how each should be managed. So likely the case there that the marking grid is splitting these into two pieces there. So the identification piece and then the management piece. Okay, so this again is going to depend on the scenario, but kind of just looking at it based on what we have here, affected by a fault in vehicles. Well, what's the main one there? It's going to be customers, shareholders, regulators. Those are kind of the main ones that you can incorporate in your answers. So recommend whether a group of fringe protesters should be recognized as accumulator stakeholders. Okay, so this particular question was examined in the past, and if you live in the UK, I'm sure you're familiar with the group Just Stop Oil. There was a scenario that was based on Just Stop Oil. I know it sounds bizarre, but it was. And basically, they were protesting. They were kind of carrying out some actions that were not really legal. They were like kind of drastic actions to bring attention to their issue. I think it was a climate related issue. Should they be recognized as stakeholders? And really, with that type of question, we have to think about the fact that they do meet the definition of a stakeholder. And if we were to ignore them as a stakeholder, then possibly we run the risk of being unable to actually deal with them because we haven't thought about it. Okay, we haven't thought about how to actually manage them as a stakeholder group. However, if you do recognize a stakeholder that's carrying out criminal damage and so on against the business, do we give them an excessive amount of credibility? I suppose we do to a certain extent. Okay. The next then is recommend the stakeholders we should engage to prevent the government from reversing the ban on new ICE car sales. Okay, so this question is looking at what stakeholders we could work with, which ones could we engage, which ones could we bring in to try, as it says there, prevent the government from reversing the ban on new ICE car sales. So this is an interesting spin on a kind of standard stakeholder question. Okay. So the next one here, so evaluate the usefulness of the sustainability measures presented in the company's annual report. So you may be presented with a series of measures, okay, sustainability measures, and then you're asked to kind of comment on them, okay, so the usefulness. So what I would consider, again, it will be highly dependent on the scenario that you're presented with, but what I would consider is, okay, have these measures been consistent over time? Or is it the case the accumulator is just picking and choosing the ones that look good for that particular period? Okay, that's a really important consideration. What about the proportionality? Are these proportional or are these absolute? And what about that proportionality? Does it make sense? If you go into our video, which is in our YouTube there, about the pre-scene, we actually criticize the measures that are given in the pre-scene, and we say, these are not so good, right? These are not great, and here are the reasons why. So I suggest you go through that video. It's free, check it out. There's a lot of information in there. The next one, evaluate the effect that the integration of all solid state batteries will have on accumulators value drivers. So all solid state batteries are like the next generation of EV batteries, lithium batteries, okay? So the integration of these batteries, what impact will it have on our value drivers? Well, I suppose one of our value drivers is our reputation for innovation. Okay, so it's going to increase that. It's going to increase that value driver. Okay, so the next one here, recommend how pest analysis could be used to predict whether EV tax credits will be granted by the government. So you would think about things like social factors. Okay, because what the government does is effectively driven by social attitudes of citizens in a country. So we're looking here at social factors. It's a part of a pest analysis. Okay. You'd also look at things like you could kind of pick and choose any of them really. You could look at political factors. Is there much, political appetite for this? Okay, so that's something else, you could kind of consider here. Okay, so let's go to the worked example. So Accumulators Board are reviewing a proposal which involves the creation of a new electric van. Okay, the proposed name for the vehicle is the Flyby. Okay, so excuse me, this is a terrible name, but I ran out of ideas. Okay, so I've been writing a lot of questions. And it will be sold to dealerships and logistics companies. So the Flyby will be fully electric and will use batteries being produced by Accumulator's Eastland factory. A factory specifically for the Flyby brand will be constructed in Leadland. Okay, so Leadland is like a fictional country we've come up with for this particular question. So Leadland is a politically stable country with a significantly developed economy. And the question says, evaluate the effect that an increase in interest rates in Leadland would have on the viability of the Flyby proposal. And this is worth 40%. Okay, So in this particular case, what I would do is I would have 3 paragraphs. We give you some extra ones, okay? So we're going to go through 4 here. We just give these to you so that you have more information. If something like this comes up in the exam, you'll have lots to write about, okay? So think about it in this case, okay? So basically they're reviewing a proposal, the board. The proposal is to create this new electric van called the Flyby. It's fully electric. The batteries will be produced by Accumulators Eastland factory. That makes sense. A factory has been, I suppose, will be constructed. The idea is that it will be in a country called Leadland. Leadland is a politically stable country with a significantly developed economy. Okay, so evaluate the effect that an increase in interest rates in Leadland would have on the viability. Okay, so the first thing that you're likely to go to in terms of this type of question is the finance costs, okay, or interest. Okay, so in this case, we're saying, well, the cost of this facility, this factory in Leadland, is likely to be significant. So it's likely going to require, as a result of that, some finance to be raised. Okay, so a viable financing method is to raise the finance using debt in Leadland. Okay, the currency that is used there, the L dollar. Okay, so basically raising an L dollar denominated debt. This financing strategy is likely to be acceptable to a Leadland-based lender as the collateral, so the security that we're using for that debt, it's going to be locally based. Okay, so if we were to use collateral outside, it could be very complicated for the provider of the finance, in terms of trying to reclaim that collateral. Could be very messy. So they're likely to be happy with the fact that the collateral, the security in this case, is based in their country. Okay. So if interest rates increase, the cost of this debt will increase, assuming it is variable. Okay, so that is kind of the most simplistic view of this risk. Okay, if interest rates are forecast to increase significantly, and remember what the question says, would have the impact it would have on the viability of the proposal. So if interest rates are to forecasted to increase significantly, this could delay the proposal or just make it infeasible. Okay, altogether. So the next piece here is looking at individual customers. Okay, so we're looking at kind of B2C almost here. So the proposal notes that the Flyby is being sold to dealerships and logistics companies. So for dealerships, the increase in interest rates could have an impact on demand. So when we have an increase, as we said earlier, in interest rates, that reduces disposable incomes because mortgages increase as well. Credit card debt, that becomes more expensive. Other things as well, car financing. Okay. So that's going to have an effect on incomes. And as it says here, this is excellent pre-seen application. We kind of touched on this theory already. The Flyby is likely to be more expensive than an equivalent ICE version, internal combustion engine version. So, changes in income, these are going to be quite pronounced, okay? Because there is a cheaper alternative out there. So I suppose if incomes are becoming more compressed, it may be more tempting to purchase that ICE equivalent. As well, and it's not mentioned here, there could be an alternative that's secondhand. That's another part of this as well, is that they could enter the secondhand market. Okay, so the bottom says the result is an impact on demand in Leadland, but it says here this may not impact demand outside of the country, because in this case it's just an increase in interest rates within Leadland. Okay, so we're reading the question really carefully here. So we're saying, look, outside of Leadland it could be a little bit different. Now, what about corporations? So another aspect of the proposal is the sale of the Flyby to logistics companies. Okay, so it actually said that when we were going through the question, just in the second point there, the proposed name for the vehicle is the Flyby. It'll be sold to dealerships and logistics companies. So if you think about a logistics company, like one maybe that, is sending out parcels or distributing parcels, they're not going to purchase like 1 or 2 vehicles. They're likely to bulk purchase a fleet. Okay, so if interest rates increase, that's probably going to reduce their willingness to purchase these because the funding will be more expensive. So it's likely to be capital expenditure for companies like this. So they may opt for, an ICE alternative, okay, a cheaper alternative, or they may just wait until the interest rates decrease. Okay, so the result of this, kind of going back to the actual question itself, which I always do, always check back to the question. The result of this is that the increase in interest rates makes the proposal less feasible. Okay. Now, as well, we could talk about the currency impacts. We're talking here about the international Fisher effect that we touched on. So the international Fisher effect suggests that perhaps the domestic currency, the L dollar of Leadland, may depreciate as that interest rate increases. Remember, we talked about that. So if nominal interest rates increase, the effect predicts that the L dollar will weaken or may weaken relative to other currencies, depending on their situation, okay? So here we give a little bit of an example, and this is picking up on information that was given to us in the scenario, and this is very much indicative of a high scoring answer. We're using information that was given to us in the scenario and we're applying the theory directly to it. So if nominal interest rates are lower in Eastland, this could result in the strengthening of the E dollar relative to the L dollar, okay? So we're applying the international Fisher effect in this case. In that event, the cost of lithium batteries could increase for the Leadland factory, okay? If it's the case that they're using the E dollar when they're looking to acquire them. If this issue is expected to be sustained, we're going back to the question itself. It could result in the proposal being non-viable, okay? So this was an excellent answer here, right? We're using the theory, we're incorporating the scenario, and we're very much aligning it with what has been asked, okay? Now, let's have a look at an additional question, okay? So you didn't expect this, right? So I've actually changed the question slightly. Okay, so let's go through the question. You didn't notice it maybe, but I've changed the question slightly, okay? So Accumulators Board are reviewing a proposal which involves the creation of a new electric van. That's the same. The proposed name for the vehicle is the Flyby, and it will be sold to dealerships and logistics companies. Now the Flyby will be fully electric and will use batteries being produced by Accumulators Eastland factory. A factory specifically for the Flyby brand will be constructed in Leadland. All fine, we understand that. In this piece here, Leadland is a developing country with a highly educated workforce. Now the question says, recommend how interest rate risk in Leadland could be evaluated before the proposal is implemented. And this is also worth 40%. So 3 paragraphs would have been good here. So the question is asking us, recommend how interest rate risk in Leadland could be evaluated, how it could be evaluated, how it could be assessed, how could we investigate what interest rate risk we have before the proposal is implemented. So we could look at past movements, okay? So one way to evaluate the interest rate risk is to review movements in interest rates over time, okay? So we would look at past interest rate movements and see, okay, how volatile is this interest rate? That's going to give us an indication as to how risky it is, how much risk is presented in this case. Now it's noted within the piece of information on the left hand side, just kind of towards the question, it says Leadland is a developing country. So as it's a developing country, the rate might be quite volatile. That tends to be the case, okay, because of political instability. And that may reduce the usefulness of this analysis, okay? So it could be, highly volatile and it's hard to kind of get an indication as to what the exact sort of risk is. However, it may be the case that some of the volatility can be stripped out if it's related to one-off factors. So possibly there were some one-off factors in the past that may have driven volatility that we can actually strip out. So a great example of this would be something like a weather impact. Okay, so maybe there was a drought one year and that had a significant impact in the economy that affected the interest rates. We can actually strip that out. That might actually improve the analysis because we're not expecting that to happen in the future. Okay. However, even if the rates vary wildly, the analysis would at least give a broad sense of the degree of volatility being faced. Now, central bank data is another one that you can use, so it may also be possible to build out a model that takes into consideration the expectations of interest rate movements that basically are coming from the central bank. Okay, so in this case, the Central Bank of Leadland. In a developing country, a future-based analysis is likely to be more useful than a past-focused one. Okay, so if there's changes to be expected, again, changes in governments and economic plans and so on, then it's likely that it's more advantageous to look at the future rather than the past. So the Central Bank of Leadland is likely to offer forecasts for future interest rate movements. I mean, central banks do this; they issue this type of information. In addition, as well, they're likely to offer their own expert analysis, rationalizing the forecasts. The forecasts as well, along with other expert opinions, could all form the basis of a model that we could use to evaluate future movements. Okay, so economic indicators is another one as well. So another way in which we can evaluate interest rate risk is to look at various different economic indicators. So a key indicator to review in this case could be something like the inflation rate and its projected movement. So significant increases of inflation, they're usually responded to with increases in interest rates set by central banks. The idea behind this is that if you increase interest rates, it will kind of cool down demand. Okay, so we're kind of reducing the amount of income that everyone has and kind of cools down demand, cools down the economy, and it basically addresses that increasing inflation rate. You could use other indicators as well, like GDP growth, wage growth. If you see rapid wage growth, again, that kind of suggests that there's going to be inflation. Inflation then suggests that there's going to be this kind of interest rate risk and so on. And this will be monitored as part of a holistic analysis. And similar to currency, you can also use hedging tools for interest rate risk to gauge the amount of interest rate risk there will be in the future. Okay, so when evaluating interest rate risk, it's possible to use hedging tools to assist, not just manage the risk. So here what we're saying is you can use them to assess the amount of risk that we have as well as managing that risk. Okay, so if you look at, for example, a forward rate agreement rate or a series of them, that's going to indicate market expectations as to what markets think interest rates will pan out in the future. As well, the premium on an option. So when you purchase an option, you have to pay for a premium irrespective of whether you exercise that option or not. If you have a very high premium, it tends to suggest that there's going to be a higher amount of uncertainty in the future. So that suggests that there's going to be more risk. That's something that, again, could be applied to currency risk as well. And interest rate future prices as well. They can be used to kind of measure future expectations on interest rate movements. So let's take a bit of a pause because my voice is going slightly. I just want to take a small water and I'll look at some of your questions. Okay, now I know some of the questions are kind of coming in. I can't really address them going through these because this would be a recording and I don't want the recording on YouTube to just me being answering questions. Okay, so that's why I'm using these kind of breakout sessions, these breakout slides to kind of go through your questions. Okay, so So I've booked the ultimate strategic case, but I don't have an invite for tomorrow. I sent an invite to everyone via email. If you're in our WhatsApp group, it's there, and you can click on it. Tomorrow's session for paid members, will it be recorded? Yes, everyone received an email on it, and it's also in the group WhatsApp, and it is at 10 a.m. UK time. What free videos? Grace, if you go into our channel, you'll see the pre-scene analysis that we have. That's what I'm talking about. There's a question there. For this pestle question, would you answer each header political? Yeah, I would. Yeah, I'd basically just use the ones that are relevant in that situation. I'd use them as headers. Yeah. Okay. What is tomorrow's course called so I know to ask you? I don't have a QR code, bought the ultimate, but it only gives me access to the again, yeah, send me an email, send me a WhatsApp. How does pass guarantee work for someone who would purchase the course now? Would it still be valid even though mock deadlines passed? Again, I would suggest that you look at the pass assurance policy on the website. So are we supposed to use all the indicators to answer this question, or do we just pick one indicator? I would use a varied amount. Okay, so try and spread them out so that you have different ones. That's probably the best approach to have. Yeah. I see a few you're kind of helping everyone out. I love that. That's like really good, right? It's really nice to see everyone helping each other out. Right, is there any other questions before I kind of plug away with core activity C? I just want to know, are you all sort of okay? And you're frazzled a bit, or how is everyone doing? I know there's a lot of content in here and I appreciate that, but I'm trying to give you as much as possible within the kind of shortest period of time I can. And it's quite difficult to do that because there is just so much to cover in the syllabus. It's huge. This is to kind of give you a glimpse into what the course looks like. On the course versions of these recordings, we go into a little bit more detail on the questions. Some of you have questions about tomorrow morning session. I emailed everyone a link to that session. It's also in the WhatsApp. So if you have any questions about that, please take that up with me directly. I'll be happy to help, but it's in the WhatsApp. Okay, so is Porter's five forces quite relevant in activity B? I mean, it would probably be tested under that, but I think in terms of its testability, it wouldn't be tested explicitly For example, give Porter's five forces, but you could maybe get a question, hasn't come up before, you could get a question around maybe taking some of those aspects of Porter's five forces model and maybe, being asked to recognize, whether they are present in that situation, something like that. That may be a kind of an SCS style question. It's kind of hard to test, to be honest with you. Normally, what you'll see when you have models and tools, strategic tools, typically it'll be the application of them that's tested, rather than just the raw theory itself. Like, you're not being asked to recall the various different factors there. You might just be given a scenario, you have to kind of interpret, okay, is this maybe one of the factors that's occurring? And I suppose it could be a good way to kind of respond to certain types of questions. Okay, so it helps you to kind of assess the competitive position of accumulator in a certain scenario. Okay, so what theory should I concentrate on? Well, that is a very broad question. I would suggest all the theory areas that we're pointing out here. Okay, so all the theory areas that we're pointing out here would be useful to look at. We're kind of pointing them out for you, so I would suggest that you look at them. We're making it kind of easy enough. I see Globetrotter 7076. What does D2E9 mean? Yeah, I think that's been kind of touched on, but that's referencing the various different lessons within our course where you can find more information on that topic. So yeah, you can just kind of go through your course. I believe you're a customer of mine, and you can just have a look at the reference there, and that'll give you more information on that topic. I would highly recommend. Oh, thank you so much. I really appreciate that. Guys, you all support me so hard. I sometimes I can't believe it. I see, pro accountancy being mentioned in forums and Reddit and things, and I don't pay for that, right? So I really appreciate you guys advocating for me. It really means a lot to me, and thank you so much for attending this. I see the attendance is like massive, right? This is like the biggest live streams. We have the biggest ones across the board, and I love your attendance, your interaction, everything. It's really cool. I love to see it. So I would highly recommend signing up for the Ultimate course. It gives you super explanatory videos. It also includes all theory videos. Yeah, so just to kind of touch on that, yeah, we have a course, and the course just kind of goes through like all the theory that you need for the SCS. It's not like recycled OT stuff. Like the way in which the OTs and the competencies are tested is very different to the SCS. You guys probably know that. If you're repeating this paper, you'll be very aware of that. And it's important to look at SCS specific theory, SCS specific questions, so that you're not wasting time with theory that won't be tested on your paper. Okay. So, guys, is there any other question before I press on? Again, I want to say thanks for all your support. I hope you're all awake. I know this is a tough one. We're like an hour and a half into it. Maybe you can hear the fireworks going off in the background. It's Halloween at the time of recording, and it's just absolutely crazy here. There's a ton of fireworks. There's people at my door looking for sweets, and unfortunately, I can't open the door. We're going to go through this session. That's the most important thing. No problem at all. Well, I love doing these sessions. I love doing live stuff. I'd love to do it more often, and we're probably going to do more. Hopefully, you guys can't hear the fireworks. We have an AI noise blocker, which is actually trying to block out that noise in the background. So hopefully you can't hear it. If you do hear fireworks, let me know, okay? And we'll try and talk a little bit louder so that we can kind of talk over them. All right, guys, let's go. Let's go for core activity C, right? So it's a long session, right? But hopefully this will give you a ton of value. I'm just kind of giving you as much as I can within the time frame. Look, if I could spend 10 hours doing this, I would, but I think you guys would log off halfway through, right? I mean, we all have busy lives and we're all working professionals, and it's not probably feasible. Okay, so core activity C is just pretty straightforward. It's like three assessment outcomes. So core activity C is recommend financing strategies, and we have three assessment outcomes. So I can recommend suitable sources of finance, I can recommend dividend policy, and I can recommend and apply business valuation models. Now, what I would suggest in the case of core activity C is that in core activity C, there is also a kind of hidden assessment outcome, right? So within core activity C, you will tend to see in the exam papers questions around share price movements and efficient market hypothesis. So it's not actually listed here explicitly, but you will see questions very often coming up in the exam papers around share price movements. Okay, so it is really important just to kind of, look at share price movements, the relevance of share price movements, efficient market hypothesis, protecting the share price, and so on, because it's tested under core activity C, and that is not immediately obvious. So that's why when people say to me, "Oh, should I use AI, ChatGPT?" Like, I encourage people to use whatever they can to pass the exam. If you're using AI to help you out, I mean, be my guest, right? But if you were to plug in these to ChatGPT, it would be very difficult for ChatGPT to discern the fact that there is share price movements and things like beta as well that are tested under core activity C. So that's why sometimes it's good to have, like, someone that you can ask a question to. That's why we run these live sessions. That's why we have live um, elements like this on our YouTube. Okay, so the first area that I think is relevant in this particular case is sources of finance, and this is probably one of the more straightforward elements of core activity C. So suggesting sources of finance. So that's the way in which this is tested these days, is you're given a scenario and then you have to basically suggest different sources of finance relevant to that scenario. Okay, so is it, let's say, for example, a very large project where possibly we're looking to construct a new facility where we build a new type of EV? Well, that's a very, very substantial type of strategy to fund. Okay, so that's going to require, possibly equity in that case. So, you need to make sure that whatever you're suggesting is relevant to that particular strategy. Okay, so, types of suggestions you can give, normally debt. And in the case of a rights issue, I mean, this is a form of equity. When we talk about equity within the scope of the SCS, it tends to be rights issues. Okay, so that's one form of raising equity, but that's the one that we tend to see the most on the SCS. So, just in terms of suggesting sources of finance, always pick ones that are relevant to the scenario. Okay, so again, if it's a very substantial investment, very substantial project, it might necessarily be the case that it would be appropriate to use debt. Okay, so it might push up our gearing ratio to an excessive level. But then again, you may get a situation where it's actually a lot shorter, maybe it's a smaller project and it's not worthwhile raising equity, and actually it makes sense to raise debt. So again, it depends on what you're given. Financing acquisitions is a massive part of the SCS. It's a really commonly tested area. Cash offers, so raising cash for an offer for an acquisition. So that could involve, raising debt. That could involve raising equity. For example, using a rights issue, and then that gives us the cash then that we can use to purchase a business. A cash offer does not mean that we're just using our existing cash balance to purchase a business. That wouldn't necessarily be the case. Now, if we're looking to acquire like a really small business, that might be the case, but that's not probably realistic for this accumulator business. A share exchange. So this is where we're exchanging shares, okay, instead of purchasing the shares for cash. Okay, so we're issuing shares in accumulator and we're swapping them, we're exchanging them with the target company's shares. And this is a great way of acquiring a business, and a very common way of acquiring a large business, because we don't have to raise cash, we don't have to raise debt, we don't have to raise a rights issue, okay, to engage with the acquisition of this business. Okay, so it retains liquidity. However, one of the drawbacks of engaging with a share exchange is that it dilutes the ownership that our shareholders have of this business, okay, accumulator group. So they may not like that, okay, they may not be on board with that, especially if the acquisition doesn't really make sense for them. Maybe they feel that it's not going to create value. Now, I have earnouts on these slides for like the last like year and a half. I have put earnouts and it has never been tested before. I'm waiting for the day when it's going to be tested. I think it will be tested, okay? Eventually it's going to come up in the exam. Earnouts, not that difficult, but I think it could be something that CIMA might include in an exam to kind of throw people off every now and again. There's like a subject matter that comes up and people just, they haven't studied it, and, they don't do that well. So this video could be quite useful to you. Maybe this is, like maybe this is the year it's going to come up. Basically, an earnout arrangement is where a portion of the consideration for the acquisition is basically contingent upon meeting certain objectives. So let's say, for example, I acquire a business and the owner of the business, he and I have a negotiation, and I say, look, okay, I will give you 1 million on top of everything that I've paid if you exceed revenue targets by, I don't know, 20%, okay, in the coming year. And that's an example of an earnout arrangement. Now, the drawback of an earnout arrangement is that you can't really do one in isolation. You normally have to have, a cash offer or a share exchange and an earnout arrangement. But typically they're used for plugging what they call a valuation gap. So if one party says the business is worth this and the other party says the business is worth that, then the difference we can maybe incorporate into an earnout arrangement. So the acquirer basically says, well, look, if you think the business is worth this, then surely you should be able to achieve this number of objectives. I mean, that's realistic, right? Because you're saying the business is worth this much money. Now, there are some other issues to consider. So things like capital structure, this has come up before. I get this question a lot in my inbox and people asking me on forums, and this came from our field, a question around raising debt and then using equity to pay off the debt. Okay, so is that a wise strategy? That's a question on capital structure. Capital structure is just a mix of debt and equity within a business. Okay, so quite an interesting question if that comes up for you. I mean, what that's testing you on is the nature of debt and equity and capital structures. The question basically, to kind of paraphrase it again, it asked if it was wise to raise debt for a project and then to pay off that outstanding debt using an equity issue. And what I would suggest is that it is unwise because equity is, generally speaking, a more expensive form of finance than debt. You may be thinking to yourself, well, why? Why is that the case? Because when a business becomes insolvent, the debt holders have a higher claim to the assets of that business than the equity holders. So basically, they take on less risk, okay? So to be compensated for that risk, the cost of equity tends to be higher, okay? So in that particular case, if you're raising debt and paying that debt off with equity, you are replacing a cheaper form of finance with a more expensive form of finance, okay? So it doesn't really make any sense. Now, dealing with covenants. So covenants are basically a series of rules that you agree to when you take on debt, okay? And you could get a question that asks you, how do we deal with our existing debt covenants? Typically, debt covenants will be related to things like the gearing ratio. So you're not allowed to exceed a gearing ratio of, let's say, 50%, 45%, 40%. You may also have some covenants in relation to the maintenance of assets. You may have covenants in relation to things like the amount of dividends that you can pay and so on. And it may be the case that you're faced with a situation where you have to try and overcome these covenants. So in the past, there was a question around, let's say we had a gearing ratio of 49% and we wanted to raise debt for a project and we couldn't because it would push it over our gearing ratio of 50% that's within our debt covenant. We can't exceed 50%. So in that particular question, the way in which we dealt with the situation was to firstly negotiate with the provider of the finance. Okay, so to have a negotiation, it could be the case that when we arranged for the loan, things were very different. Maybe we were less successful as a business, less profitable. And now that we're in a better position, maybe we can kind of relax some of those covenants. You can also refinance, so you can actually obtain a loan from another institution and pay off the existing loan. And that new loan would have a whole different series of covenants and rules attached to it that are probably more favorable. Okay, the other thing you can do is try to increase the amount of equity in the capital structure. You can do that by not paying dividends, so retaining more profits. Now that brings us into dividend policy, which has actually come up in the exams a lot more as of recent. So what do we need to be mindful of in terms of dividend policy? So the impacts of changing policy. So if you have an existing policy, what impact would it have if we look to change that policy? So at the moment, as accumulator, they kind of pay a little bit of their profits out in dividends. So not much, they pay like a kind of a slice of their profits out in dividends. It's a bit of a strange strategy, but I suppose there's a bit of retention there and there's a small bit of dividend. Now, if we change our policy, think about the impact, okay? So if we change it to a zero dividend strategy, the signaling effect comes into play there, right? What signal are we sending about the business? It could be the case that we send a signal that actually the business doesn't have enough cash. Maybe there's worries around the amount of cash that we're going to have to actually pay out this dividend. Okay, so think about that. You could also have the clientele effect come into play. So the clientele effect says, well, okay, we have this policy that attracts a certain group of shareholders over time. And then when we change our policy, they're going, wait, I prefer the initial policy that I was used to, right? That I would have planned my tax affairs around. And when we look at the preceding, we can actually see that the competitor organization, Adam, they have a dividend policy very similar to ours. So if we were to change our policy, likely the case that we would see some of our investors move then to Adam. So we should see a potential share price decrease because they're going to exit their position and move to the competitor organization. As well, try to think about things like profit warning. So maybe during the year we see that actually we're not going to sell enough, or maybe we're going to not meet our expectations in terms of profits, and as a result we're not going to meet dividend expectations. Okay, so you need to maybe consider the implications of warning markets in advance that we're not going to meet dividend expectations. Okay, so one of the implications is that it will basically manage volatility to a certain extent, because if you send out a warning, of course it's going to affect the share price nearly straight away. But then when we come to the end of the year, it's not going to be a big shock to everyone. Whereas if we said nothing and then we waited to the end of the year and we said, actually, we're not going to basically pay you the dividend that we said we were, we don't have enough money, then that's going to be a big shock. Okay, so that's going to create a big amount of volatility. Now, you may get one-offs, okay? So these don't come up much in the exams, but I think they will one day come back. They're kind of an old topic that was tested many years ago. A one-off bonus dividend, okay? So basically paying out like a big, massive dividend just as a one-off bonus, as a way of kind of dealing with windfall gains, okay? So gains that we didn't expect, maybe returning that capital back to shareholders. Now, one of the drawbacks of engaging with a one-off bonus dividend is that it can create the expectation that we will do this next year, or we will do this again if we have another windfall gain. And then that creates a dangerous expectation that if we don't fulfill, could have a negative impact on our share price. Okay, so maybe our shareholders would be waiting and they'd be saying, okay, next year, they're like, where's the dividend? Where's the one-off dividend? And they don't get it, and then possibly there's a share price decrease. Now you could get share repurchases as well. These came up before in the exams, I believe, for KCTP in November 2020. They were answered really badly. Share repurchases, fairly straightforward. This is where a company purchases its own shares. Basically, they do this to, cynically speaking, to increase the share price. Very often that's the case. And the reason why this happens is because there's less shares in circulation, so it tends to improve things like the earnings per share ratio, and as well, it shows confidence in the company, because a business wouldn't purchase its own shares if they thought they weren't any good. Like, it shows that they're confident in the company. Now, suspending dividends. This has come up recently. I don't know how realistic this is for Accumulator. However, it could be the case that we acquire a business and then maybe there's a shift in the dividend policy and we have to consider that. And that has come up before in the past. So, we need to think beyond just Accumulator. We could have an acquisition scenario where this comes into it. So suspending dividends is where we basically halt paying dividends. So think about the implications of that. Well, we're going to have more capital retained. We could invest that. But of course, there's a drawback, right? Because we've missed our expectation in terms of the dividend that our shareholders thought they were going to get. So likely it's the case that you would see people exiting their positions, and they're going to sell their shares and there'll be a share price decrease. Then we have a scrip issue. So a scrip issue is basically where you receive shares as a dividend instead of receiving cash. Okay, so for the business, it's good from a liquidity perspective. However, it may not be tax advantageous to our shareholders. Okay, so business valuations, yeah, it's not tested a whole lot, but when it does come up in the exams, it's a great way of getting marks because the questions, they tend to be the same, okay? So what do we need to know in relation to business valuations? Well, the various different valuation techniques. So we have the asset-based, earnings-based, we have the cash flow-based, and we have the dividend-based models, okay? Now, this is the standard way in which this has been tested before in the past, the challenges in valuing a business, okay? So it will depend on the scenario that you're given, but here's some kind of generic points. If it's unlisted, okay, that's going to be a challenge because we don't have an observable share price. We are unable to calculate with ease the market capitalization, and that creates a challenge. Profitability, if the business is not profitable or it has like a very slim profit, that's going to make things like the earnings-based valuation method not that useful, okay? Possibly we have to use an alternative methodology. And also, if you think about it, if they're not that profitable, it's likely the case that they're not going to have like a very big dividend stream. And as a result, then the dividend-based valuation method is probably not going to be that effective either. If they have a large proportion of intangibles in relation to their overall asset base, That could create problems if we're looking to use the asset-based valuation methodology, because how do we value the business then if everything is an intangible? It can be very difficult to value intangible assets, okay? So, for example, a patent. I mean, how do you value that accurately? That can kind of distort the valuation that we place on the business. You could also get a question around valuing a divestment. Okay, so we're looking to sell an entity and we have to come up with a valuation for it. That has actually come into the exams before. So it's not just about purchasing businesses, it can also be about selling businesses. Now, share price and efficient market hypothesis. Again, this is a topic that people tend to find quite tricky, but it does come into the exams a lot. So there's no point running away from it, okay? It's something that could be tested on your papers. High chance of it coming up. So these are the types of things that come up. So evaluating the impact on the share price. So we're thinking about what impact will a certain issue have on the share price, okay? So for example, a cyber attack, okay? How will that impact the company's share price? Okay, and what I would do is I would think about the short-term impact and the long-term impact. So in the short term, if we think about the varying types of markets that we have, capital market efficiencies, we can have semi-strong, weak, strong, and so on. Generally speaking, most capital markets have semi-strong levels of market efficiency, which basically means that if new information relating to the company as it relates to shareholder value creation or destruction, if that's released into the public, that's going to have an effect on our share price, okay? So if it's the case that we have new information that relates to that in the market, so a cyber attack has damaged the company, there's been a data breach, well, that's going to relate to shareholder value destruction. That's going to lead to a share price decrease, at least in the short term. But in the long term, we're thinking more so about the fundamental value of the business, okay? So if, for example, we see a decrease of 5% after that cyber attack, and then we see, okay, 5-6 months later, nothing has changed, the share price continues to be depressed by 5%, what that is basically saying is that the markets do not have confidence that that issue has been resolved. That cyber risk related issue has not been resolved. And once it is resolved, then we should see that share price kind of rebound a little bit. Okay. Share price movements. Okay. So you may get questions around interpretations of share price movements. So trying to understand what this says about the business and what's going on. Okay, so we have different movements, like how do we interpret that, and the relevance. Okay, so we'll talk about that in a few minutes. The implications. Okay, so there may be consequences of share price movements, and this could come into play around acquisitions. Okay, thinking about things like price risk. You may get questions about as well, and this is actually an interesting variation on the kind of standard questions, protecting the share price and incorporating positive information into the share price as well. So in terms of protecting the share price, we're talking about scenarios where, let's say, something negative is going on and we're looking to see, okay, how do we protect our share price? How do we make sure that our share price does not decrease by a significant percentage? Is there anything we can do? And yes, there are lots of things you can do. In the immediate term, it depends on the issue, but you could have a press release, you could have maybe a briefing with analysts, you could also have some form of disclosure within your annual report. So in the principal risk report, are you dealing with that risk that relates to the issue? And in terms of the other side of this question, so incorporating positive information, it's effectively the same thing. Okay, so you're just trying to build that information into the share price. Now, market analysts, this was kind of a popular theme in the exams many years ago. Basically, an investment analyst is someone that works for an investment bank or an investing firm, and effectively what they do is they take into consideration the information that is in the market, and then they give a buy or sell recommendation on a company's shares. Okay, so in the case of Accumulator, it is possible to actually reach out to these market analysts in advance and give them some information about what's going on with the business, and then those market analysts would say to their clients, like big investors like pension funds, mutual funds, and they would say, yeah, Accumulator, I actually would recommend purchasing their shares. I think they're undervalued. These are the strategies that they have, and I've taken into consideration all of the workings that they've given me, and I've looked at them in detail, and I've come up with an assessment that says actually they're going to generate significant shareholder value into the future. Therefore, yes, they are worth investing in. Okay, so beta is the next one. Now, beta has to be, I think, the most hated topic of all, right? It has to be the number one most hated topic. If you have a disagreement with me on that, feel free to put in your most hated topic, okay? But I think this is the one that we get the most number of questions on. And actually, beta is tricky. However, it's not the most tricky topic in my personal view. because the scope of this topic is not that long. It's quite a small topic in the overall SCS ecosystem, okay? So with beta, basically beta is a measure of relative systematic risk, okay? So basically, when we think about beta, it's the sensitivity of a company to systematic risk. And systematic risk is risk that cannot be diversified away. It's risk that affects an overall market. Okay, so the Duxland Stock Exchange. So a good example of this would be something like a major recession. So if you think back to 2008, there was a massive recession, certainly here in Ireland, it was a huge one, and it affected every single company negatively. There was no diversification away from it, it just affected every company. But it affected every company differently. Some felt it more. So, for example, the banks, AIB, for example, they had a massive impact. Bank of Ireland, massive impact. But other companies felt it too, okay, but to a lesser extent. Okay, so this is basically measuring the sensitivity of a company to that risk. And, what's the relevance of it? Well, within the preceding document, you have been given the beta for the business. Okay, so if the beta is 1, it means that the company is as volatile as the market. If the beta is more than 1, it means that it's more volatile than the market. And if the beta is less than 1, which it is for us, it means that it's less volatile than the market. Okay, now just important to note here, the beta that you have within your preceding document is the levered beta. Okay, so it takes into consideration business risk, which is the risk related to a business's operation. So, for example, the amount of competition that it faces, and finance risk, which relates to how much debt they have within their capital structure. Okay, so those are the two elements of levered beta that we need to be aware of. Okay, so that's something that we just need to kind of bear in mind. The next is the impact on beta. Okay, so something just to note, guys. I just want to check and see, is my screen okay? I'm just going to be 2 seconds. I just want to make sure my screen is okay here. I think the it's kind of gone on standby. All right, sorry about that, guys. So we have a monitor here, and it was going on standby mode because it was not it wasn't being clicked on enough. Okay, so I just had to turn that back on there. Okay, so we're all okay, guys. I just want to make sure. Sorry about that. That's one of the quirks of doing live work, is that I suppose anything can happen. I've had a lot worse happen over the years. Uh, but yeah, there's some questions here just in relation to the course. I'll answer those questions, yeah, just at the kind of the breaker slide. My ability to help you on some of them is a bit limited because it's obviously a live session. So we're all okay to go? You guys can see the screen, everything's okay? All good, okay, perfect. Okay, so impact on beta, you may get a question that asks you, okay, how do certain situations, how do certain events impact the company's beta, okay? And what I would suggest in those types of questions is think about the business risk and think about the finance risk, okay? So think about it, like if the company maybe engages in an acquisition, okay, does that change the business risk? Does it increase it? And what about the finance risk? Was there debt involved? Okay, so think about it like that, and then that's going to have your answer kind of there in front of you. Is like, does it change those two components? Does it change one of them? Does it increase it, decrease it? That's going to basically give you your answer. Okay, so you could have maybe a scenario around acquisitions. We had currency movements come up before in the past for Rhodamine, which was in variant 6. Okay, so the potential questions. So the questions here. So evaluate the strengths and weaknesses of using a rights issue, debt, or a share exchange to acquire a lithium mine. Okay, so in this case, we've been actually given the types of financing that we could use. So the rights issue, the debt, or a share exchange. Okay, so what I would do is I would split my answer up evenly there. We have 3 different requirements, and I would just talk through the strengths and weaknesses of each. So that's probably going to be worth 60%. And again, you would just allocate your paragraphs across that sort of 60%. So you would have a strength and a weakness for each of those. So the next question is, recommend the factors to consider when using a rights issue to fund the construction of a battery recycling facility. Okay, so the factors to consider, things like the amount of information that we would disclose to shareholders. Okay, as well, what else would we consider? We would consider the discount that we're going to apply. Okay, because when we have a rights issue, of course, there needs to be an incentive for shareholders to take up rights. So we need to consider the price the discount that we're going to have within that rights issue. Okay, whether we use an underwriter, that's another consideration. Evaluate the challenges in raising debt for a long and significant sodium battery development project. So this is quite an interesting question. This is testing you on kind of financing and maybe appropriate sources of finance for a specific type of project. So in this case, it's a long and significant development project. So evaluate the challenges. I mean, one of the main challenges is that for this type of project, I mean, the provider of the finance is unlikely to give us all of it up front. Okay, so they're unlikely to give us all of the financing up front because it is kind of like an experimental type of project and the returns are not guaranteed. So it's likely the case that they're going to require us to break this up into phases and then we would finance each phase. Okay, so that can be difficult to do, even just to kind of come up with the different phases, because there is a degree of uncertainty with this project, especially if it's innovative and experimental and so on. It may be the case as well that they might be unwilling to offer us fixed rates on all of those different phases, because if they go into the future, it's too risky for them. They're going to want to have variable rates to ensure that this is going to be a profitable venture for them, the providers of the debt. Now, dividend policy. So evaluate the implications of using windfall gain to fund a partial share repurchase program. So, one of the implications is that it could be perceived as being maybe a lack of creativity on the behalf of the board. So, could this not be invested into something that's a little bit more sustainable? Something like new battery technology, something like a new type of vehicle. This seems like maybe not the best use of funds, but it could be also perceived as, again, a sign of confidence, and that could lead to an increase in our share price. The next one, so evaluate whether an increase in the proportion of profit paid as dividends would help increase our share price. Okay, so this is testing us on changing our dividend policy effectively. And if you think about the question, it's saying whether an increase in the proportion of profit paid as dividends would help increase our share price. Okay, so that's quite an interesting one there. So if we were to increase the amount that we pay as dividends, it wouldn't necessarily increase our share price, because if you think about it, what about the clientele effect? Our current group of shareholders, they like our dividend policy. They're there as a result of it. They're quite happy with it. They're engaging with the company because of it. And if we change it, then we're likely to cause them to leave, and they'll try and find something that matches their preferences a bit better. So that could be something that you bring into your answer. You could say, well, look, if we increase the amount of dividend that we pay, it could result in them paying more tax. Okay, so maybe their tax situation is set up that actually they gain maximum benefit by just receiving some dividend, but not much, and then maybe they make the rest of their returns on selling the shares and so on. So, it's not necessarily going to increase the share price. Okay, so it's kind of testing your ability to think critically about dividend policies. Okay, so the next question here, so evaluate the arguments for and against warning shareholders that dividend expectations are unlikely to be met. So we kind of covered this off a little bit, but in terms of the arguments for, again, we said it's a way of managing volatility with the situation as well. In terms of the arguments against, we could say that it could be perceived as maybe kind of giving up a little bit. Okay, so let's say halfway through the year we say we're not going to meet dividend expectations. Well, our stakeholders may say, well, why aren't you doing something about it? Like, it seems like you're kind of giving up. Maybe there's a strategy that we could pursue, and it could actually help us to reach that target that we've set in terms of our profits. So it could be perceived as maybe being a lackluster response to the issue. Business valuation. So evaluate the challenges in setting a selling price for the Scorch entity that's going to be divested. Okay, so you need a little bit more information to answer this question properly, but one of the main challenges is trying to, I suppose, separate, and this sounds like very unique, but this is very much an applied answer, trying to separate out the Scorch entity from the accumulator group. Okay, so when you think about vehicles, you think about BMW, Mercedes. Like, I'm the type of person, like, I know what they look like, and I can see the top of the car. I know, okay, this is a BMW, this is a Mercedes, but I don't know the models. Like, I wouldn't know them at all. And so if you think about it, if we're looking to sell the Scorch entity to a different company, let's say it's going to be divested and sold to another car company, well, we're going to have to factor in that this car is no longer going to be a part of Accumulator. So it's losing that brand value that comes along with being an accumulator vehicle, because likely it's the case the accumulator invests in advertising, marketing, brand partnerships, just like car companies do, you know. And that's going to be very hard to factor into the valuation, the fact that we need to separate it out away from our brand. So that is an expert type of answer for the SCS, okay, just so you're aware. We're using information there from the pre-scene, industry, research, and so on. Now, evaluate the challenges in valuing a business that sells autonomous driving software. So in this case, you'd likely be given more information than this, but some of the challenges could include things like not having profits. You know, often it's the case with like startup type businesses. They're loss making for several years, and then eventually they make a big profit and so on. That could be a challenge. In this case as well, I mean, if it's a software business, it's not likely to have many assets, so the asset-based valuation methodology is not going to be that useful. So it's not examined here, but if we're trying to overcome these issues, we would likely use the discounted cash flow method for valuing the business. Recommend the approach to take when valuing an unlisted manufacturer of electric vans. So the approach that we take in terms of valuing a business is trying to find the minimum and then the maximum, okay, in terms of this case, we're looking to value a business that we are going to buy. So we're looking at the minimum that we would pay and then the maximum, okay, and then we try and negotiate in that range. So the minimum is normally obtained by trying to find the asset-based valuation. Okay, so that typically is the lowest, but again, you know, sometimes it isn't, right? If the business is loss-making and, you know, it's not paying any dividends and so on, actually they would probably generate an even lower valuation than the asset-based. But generally speaking, the asset-based gives us the kind of floor, and then the discounted cash flow method gives us the ceiling, and then we negotiate within that range. Okay, so that's how I'd structure my answer. So share price and efficient market hypothesis. So recommend ways in which the board can protect accumulators' share price following the publicity of a major quality issue. Okay. So again, we talked about this, you know, releasing information into the market, disclosures, you know, in the long term, trying to resolve the issues themselves. If it has been demonstrated that there is a fundamental issue with the business, then trying to invest in the business to fix those issues. Evaluate the relevance of a share price decrease in a company when evaluating it as an acquisition. Okay, so the relevance, is it relevant? Is it significant? Should it matter? You know, in a company when evaluating it as an acquisition? Well, to a certain extent, yes, because if we have a decrease in the share price, you know, maybe that's because of an issue with the business. So maybe they've recently had a cyber attack, or maybe they've had a quality issue or something like that. Maybe it says there's something actually wrong with the business, and you know that's going to be a factor when we look to acquire it. The last one there, evaluate the impact that a decrease in the share price following a cyber attack will have on the company and the board. Okay, so evaluate the impact that a decrease in the share price following a cyber attack will have on both the company and the board. Okay, so what I would do is I would split my answer up there in terms of the company and then the board. Okay, so I'd have two, you know, kind of parts to my answer. Okay, and if it's worth, let's say, I don't know, 40%, I would have two paragraphs and two paragraphs, or let's say if it's worth 60%, maybe 3 and 3. Okay. So beta, what types of questions? So recommend whether the acquisition of a sodium mine would impact accumulators levered beta. Now you would given, you know, you're likely going to be given more information here, but what I would suggest is focus on, as we said, finance risk and business risk. Okay. So there will be some clues. More often than not, there's going to be some clues here to give you more information on that. So what I would suggest is look and see, okay, is there a change in debt? And is there a change in the business risk? And that's going to answer that question for you. Evaluate the consistency of accumulators' recent sharp share price decline with its low beta. Okay, so really tricky question. Okay, really tricky question. And some people who are on my course, maybe you've seen that question somewhere. I don't know. Maybe you've seen that somewhere. I couldn't say for certain. Okay, so the consistency of accumulators' recent sharp share price decline with its low beta. So you might be thinking to yourself, well, that doesn't really make any sense. So they've had a sharp share price decline with a low beta. So would a low beta not suggest that they would have a relatively moderate or a low share price decline? And what this question is testing you on is your ability to understand beta. So with beta, remember we said it's measuring a company's sensitivity to systematic risk. Okay, so if it's a company specific issue that's affecting the business, then the beta doesn't really play a role. That's not systematic, okay? So if, for example, they've had a cyber attack and it's been devastating for the business and we've had a massive share price decrease, the beta doesn't come into that, okay? That's a misunderstanding that people typically have is they go, okay, low beta, that means that it's not going to affect the business that much. It doesn't really work like that, okay? The beta is measuring the sensitivity to systematic risk. So if it was a systematic issue, then yes, we would need to consider that. Okay, that would be relevant, and the beta would be relevant in that case. But in this case, it's if it's related to a company specific issue, it's not relevant. So evaluate the implications for accumulator of having an increased levered beta following an acquisition. So when you have an increased beta, what are the implications of that? Okay, well, it creates a higher amount of volatility normally, so it's likely to cause some shareholders to exit their position. So it could lead to a share price decrease as people exit their position on accumulators shares. When I say exit position, I mean they sell their shares. Okay, so a worked example here for core activity C. So accumulators board is evaluating the acquisition of a Duxton-based company called NeoCharge. You can see here the names are super original. NeoCharge is the third largest charging infrastructure provider for EVs in Duxland. The company operates across 10 countries and has plans to expand further. Since evaluating the acquisition, both companies have seen their share prices increase by a small margin. Okay. And Suren Pillay, the non-executive chair, noted that the rumours of the planned acquisition are driving the share price movements. The question says, recommend how the board should interpret both companies' share price movements. So the question is asking you, how should the board interpret, how should they make sense effectively of these share price movements? Can you figure out what's happened here? Okay, and let's look at this from 3 to 4 different perspectives. Okay, so this is worth 40%. You could have, based on our formatting, our suggestion, you could have 3 good quality paragraphs and do very well here. We're going to give you 4 because we want to give you as much information as possible. So what I would suggest if you're watching this in recording format is you pause the video here and try this yourself, okay? But you're watching with me live, so I suppose you can't really do that. Strong market efficiency is something we should consider. So if Duxton has strong levels of market efficiency, the share price movements are logical, okay? So when we have a strong level of market efficiency, basically what this means is that both publicly available information and privately available information is encompassed within the share price, okay? So strong, and we're actually saying it here, so strong market efficiency implies that both public and private information is built into the share price. I always think it's important in your answers to make it really obvious what you're talking about, okay? Show them that you understand what you're talking about. So in this instance, information related to the acquisition, it's private information, okay? So it could be the case that signals are coming from either company that suggest a potential bid is coming, and that's being incorporated within the share price, and that's giving us some interpretation as to what's happening here. Okay, so accumulator, they may be, as we say here, they may be buying some shares in advance in order to take advantage of that pre-bid price. Okay, so this gives us one potential interpretation. It kind of helps us to figure out what's going on here. Now, semi-strong levels of market efficiency are a little bit more common, okay? So they're kind of what you would expect in, for example, the New York Stock Exchange, okay? So we say here it's more realistic that Duxton has semi-strong levels of market efficiency. We actually say that within the pre-scene analysis that we have within the first 15 minutes or so. So again, that's available on our YouTube channel. I recommend that you check that out. So this level of market efficiency suggests that both share prices in this case for both companies, they reflect public information only. So that private element is taken out of it. However, let's think about it here, because in this situation, it said that there were some rumors about what's going on. Okay, and rumors do constitute public information. So the rumors could have a marginal impact since they do represent public information, right? So we're kind of showing that we understand here semi-strong levels of market efficiency. However, let's think about it, right? So yes, there could be rumors, that's new public information, but markets may be reluctant to act on these rumors because they're rumors, okay? They're not exactly concrete pieces of information. As it says here, especially when the details are unlikely to be complete, you think about a market rumor, a tip-off. I mean, these are like little tidbits of information. They're not really enough for markets, serious market participants to actually act on, okay? So at most, we're saying here, the rumors likely have had a minor impact, if any, on both companies' share price. Now, here's a really good point. So, it may be the case that the share price movements are being driven by unrelated factors, okay? So, we're saying that it is too simplistic to say that it is the rumors here that are driving the share price movements, okay? So, it's too simplistic to draw that conclusion. Realistically, a large range of factors could be at play here. Okay, you think about the nature of the two businesses, there could be lots of different things that could be driving the share price because it's only a small margin. It's not like it's a big increase or decrease. It's not really that clear, okay, that there's a correlation between the rumors and the share price movements, okay? So, since both companies are based in Duxton, I mean, there could be a Duxton based factor, okay? So, we've picked up on the scenario, we're using information from the scenario here as well. I mean, both companies effectively operate in the same industry as well. So it could be like an industry related factor that's at play. Okay, so we need to consider that too. Now, the last point is that in terms of interpreting this, I mean, the board should interpret this movement as effectively irrelevant because information relating to the bid for NeoChart, it's not really public information, and rumors will likely be ill-informed or too short really for market participants to actually act on. So we're kind of discussing again, we're criticizing the rumors and we're saying, look, these rumors, they may have been passed on to only a small number of market participants. The information is highly limited, potentially inaccurate, and as a result, the degree to which the rumors will be priced into the share price, I mean, it's very limited. So the movements here are somewhat irrelevant, okay? And you could also say that in the future, when we actually do make an announcement, it's going to completely change the share price, assuming that again it relates to shareholder value or shareholder value creation or shareholder value destruction, okay? So that leads us to our next pause. Okay, so I'm going to go through some of your questions. Now, I don't want to stay too long on this because I'm conscious of the time. I know you all want to go to bed, especially for my friends in South Africa. It's probably quite late at the moment, so I can see there's probably a bit of drop off here. Okay, so I see Okay, so I see some questions here. Okay, so hi Hugh. Just want to confirm what I read in the past assurance policy. It's exam plus proof and not mock based. Um, yeah, pretty much. Yeah, pretty much. Yeah, it's based on your score. I don't want to say too much on the because it's quite thorough. So I would just like click on and have a look at it. But yeah, you're right to an extent. Yeah, but I would suggest that if you want to be on the course, you have to do the mocks and the assessments. I mean, they're like, if you look at the last set of exams that came out and you map back the questions that were tested versus the ones that we tested, I mean, like we we predicted a big chunk of them, and our pass rate was 84% in the last window, and we had two top five global prize winners. So I'm not saying that to brag. I'm just saying we did a really good job last time. Some of it's luck, to be honest with you. It's like just kind of comes down to luck. But I would suggest if you are on the course, please, 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 please do the assessments and the mocks. The markers are trained so much from me, right? I give them a hard time. So if you're gonna go on the course, I mean, it's value for money for you. You have to get the mocks done and the assessments. Okay, it's like otherwise you're wasting your money. Okay, so profit warnings. Would there be a right or wrong suggestion to this? Yeah, and we kind of covered that off. Yeah, there would be. Yeah, would you cover both sides, such as yes, do warn or not? Yes, I would. However, have we given up? Yes. Message sending that we aren't confident. Yeah, I agree. Yeah, you would. You would. You would look at both sides in that case. Yeah. I'm coming into SCS after a long break. Did the strategy pillar a year ago. During or doing November exam, would going through your course lectures ultimate course be enough as my revision? Yes, it would. It would. And you know what? If you're willing to really give it a go over the next few weeks, like I mean, it's you pretty much like got a good chunk of November, and you're really willing to go hard with it. Like yeah, it would. But it requires you to do, as I said, the assessments and the mocks. Like I don't want to make any false promises and say, look, this one thing will help you, you know, pass or fail. I mean, it requires you to work hard on the assessments, on the mocks, on all the materials, and engage with them, and kind of take that effort. We can't make any promises and say, oh, you're definitely going to pass the exam if you do our course. I mean, there's we will help you as much as possible. If you know anyone that knows me, I will do as everything and I can to help you pass the exam, but I can't guarantee it. Okay, so hopefully that kind of clears that one up. Um, I got a large question in my MCS about problems with valuing the divestment. That's interesting. I intend to accept the exam in February 26. Can I purchase the course now? You can, just don't do any of the assessments or the mocks because there's just one set of them for both windows because the course covers both windows. So you could, if you wanted to sit the exam in February, purchase the course today. I mean, yeah, you could do that if you wanted and just kind of take a longer run on it. I'm coming into the SCS after a long break. Did the strategy pillar. Oh, yeah, sorry, read that one. I would say it largely depends. I've just purchased the course. How quickly would I receive access to the WhatsApp group? Yeah, okay, so I will give you access after this, okay? So it's quite late here, so no one's working in my business today at this hour, so I'll do it after and I'll send that over to you. And thank you so much for your purchase. I really appreciate it. I'll make it worth your while. You're going to join us tomorrow. I hope you will at 10 a.m. UK time. It's early, but look, it'll be worth it. Honestly, there's content tomorrow that I'm going through live on a Zoom call, and it is content that's not on the internet. It's not seen anywhere. It's not on the course. It's nowhere. It's going to be super useful to you. So I'm hoping to see you tomorrow. Hope that would be the case. Okay, maybe let me know if you're still here. Maybe you've gone off because it's so late. Look, guys, I want to say thanks for keeping with me, keeping engaged. I see the attendance numbers. I mean, we haven't really dropped off that much. You guys are really into this stuff, and I really appreciate it. Okay, I want to say, like I said before, look, thanks so much for all your support. It really means a lot to me when people purchase a course from me. You're funding the content, you're funding us improving everything that we have. People ask us, where's the MCS products? I mean, we have to invest in this stuff. It costs thousands to develop these products. We take it really serious. So it's not a case of just like kind of slapping a few things together. I mean, it really does take a lot of investment to create these. So I really appreciate that, guys. That purchases and support and views and comments and everything, it all helps me. So thank you so much. So look, I mean, there are some things about the course that I'm not running an ad here, really. I'm just kind of giving you some information. If you are interested in it, you're thinking of sitting in February, November, course purchase counts both. Included, you have all of this, right? So you have all the theory videos for the SCS. There's a ton in there. There's 31 of them. Highly testable topic videos. So we have the CBT sessions, which are what we're covering through here, but we go in a little bit more detail, have a clean studio recording of them. You also have expert exam technique within that same unit. You have access to our digital textbook. Please remember, it's just available within the platform. We don't allow people to download and print it out because we need to protect our IP. I'm very clear with people about that. I try to be as honest with people, like we need to protect our intellectual property as much as possible. So it is important to just kind of say that from the get-go. There's 2 assessment sets. These are basically 2/3 of a mock paper. You get feedback on them. They're exam style. They're based on the exam writing criteria. Same with the mock papers. The mock papers are tough. Anyone who has sat the mock papers with me knows that they're difficult. They're proprietary questions. These are not ones that you would have seen elsewhere. These are the ones that everyone is trying to get legally or illegally, right? Payment plans as well. So there's a payment plan option on the website. You pay now and the half now, half in a month, and then you have past assurance. So we've been kind of talking about that. There's a policy there for that as well, and the policy is basically you have to score between 70 and 79. Okay, but yeah, there's a bit more detail to it, but yeah, that's basically it. And look, direct contact with me. I mean, our group at the moment is so high powered, it's unbelievable. I mean, we're really like pushing each other as hard as possible. I mean, look, I'm up late today. I'm doing this for free, right? I want you to pass the exam. I don't know what way I could express that any harder, right? There's I can't think of anyone in the market that's as invested in this as me, right? I mean, I'm CIMA qualified myself. I represent my business with various different programs with CIMA. I'm really entrenched in this industry. I really take it serious. If you see me on LinkedIn, I put my name out there. I put my reputation on the line, and I say things that I feel are wrong in the industry, so trust me, like I'm trying as hard as possible to ensure that you pass and also to advocate for you, okay? So guys, is there any other questions there? So I keep recommending your course to people I know who study with the SCS. Thank you so much. I really appreciate that. So if the deadline of assessment 1 is already passed, will the system allow us to submit? Yes, 100%. 100% we will let you sit that, no problem at all. And I encourage you, if you sit that soon, we will get feedback to you as quick as humanly possible. We generally speaking have a turnaround time of 48 hours. This time around it has been quicker because we have markers now in multiple different time zones. We have tried as much as possible with the huge volumes that we have to manage it. And I think just based on some of the customer feedback that we have, that it's been really successful so far. I think the majority of people get it back within 24 hours. And trust me, I had a call with one of the markers today, and I love them, right? I love how invested they are in people's success. They're asking me like, how can I do more things to help people out? I can see people making the same mistakes, and these people, again, just like as passionate as I am, is trying to get you through the exams, right? Because I've been in your position, and I just like when I was doing these exams, right, there was like such terrible options back then. It was 10 years ago. It's changed a little bit, right? But there was terrible options out there. And so I wanted to create something that I wish I would have had when I was kind of going through these exams, right? So that's kind of my point on it. I think I had feedback in 2 hours. Makes sense. I'll be there tomorrow. Awesome. I'll send you all the details after this as well. I'm just kind of constrained at the moment because I'm on live. So once I'm done, I'll send that on to you. And thank you so much again for your purchase. It really does mean a lot to me. I don't just say that. It really does. Okay. Okay, I'll be back in 2 hours. I mean, that's a good endorsement, right? I mean, that's insane, right? So let's look at core activity D. So core activity D is it's actually quite a nice one, I'll be honest with you. I think it's one of the nicer ones. People tend to fare quite well in core activity D. And really, core activity D is all about risk management. So if you're someone who did well in P3, maybe you did the OTs, or maybe you've gone through the FLP and you did the competencies related to risk management, you'll probably do quite well here. So core activity D is evaluate and mitigate risk. So I can evaluate risks and recommend responses and can maintain the corporate risk register. And we also have ethics in here. So I can identify ethical dilemmas and recommend suitable responses. I'm going to go out on a limb and say it's almost guaranteed. Now, almost being the key word there, I have to be very careful following the CIMA code of ethics, but it's almost guaranteed that you're going to get a question on at least one variant on ethics. Okay, that's been the case for like the last, I don't know, 6, 7 years. Okay, so it's really, really a crucial topic to be aware of. Okay, ethics is super, 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 super important. Okay, I can evaluate and mitigate cyber risks. Okay, so cyber risk, I think this is an area people tend to do quite well in because it's quite current. We're all thinking about it. We hear about it. M&S, Amazon, all these kind of businesses that have had cyber attacks. I mean, we're hearing about it every day. I can recommend internal controls. This one, not so desirable. So cyber risk, I think, is a big one here because when we go into the principal risk report for the business accumulator, we see no mention of cyber risk, which is actually something that happens a lot within the SCS. It's not particularly unique to this business, but it does insinuate that possibly there has been a lack of consideration around cyber risk. We see no mention really of cyber risk within the pre-scene. I think it could be a scenario that develops where possibly there's been a cyber attack on either accumulator or one of our stakeholders. So, for example, the charging infrastructure provider. Within the UK, there have been some attacks on charging infrastructure providers where there's fake QR codes. You scan the code and it brings you to like a nefarious website. You sign up and it's capturing passwords, harvesting data, and so on. So the things that we need to be aware of are the objectives that we set in relation to cybersecurity. So within the scope of the syllabus focuses on objectives that are related to what they call the trust services criteria that come from the AICPA's SOC 2 framework. Now, you don't need to know that, but basically, these objectives are important the way in which they're phrased because they come from a framework developed by the AICPA, which of course has a relationship with CIMA, and these have been tested through that. You don't really need to know, again, the background, but what I'm saying is the words that are used here are important because they will be stated like this if it is tested, okay? So the objectives that a company should have, the goals that they should have in relation to cybersecurity, the first is security, right? So we need to make sure that we have no unauthorized access. Availability, this is relating to uptime. We need to have optimal amount of uptime. So when we think about AWS, right? I mean, we saw that. We saw websites that relied on AWS, they just crashed and we couldn't use them. Some big, big, big websites. And so that's a great example of availability, right? I mean, if you think about my business, if my business was down for a day, I mean, think of the complaints I'd get and so on. Okay, I don't even want to think about it, right? Processing integrity, so making sure that data is being processed accurately. Okay, so what types of controls do we have in relation to data processing? Okay, so that would be something we would consider if we were looking to try and reach that goal of high quality processing integrity. Confidentiality means that we keep information that has been designated confidential secure. Okay, and privacy is the goal of ensuring compliance with things like GDPR or similar in your country. Okay, so I know in America there's a different set of data privacy rules, and of course in China, South Africa, the different countries we sell to, there is this their own set of rules that they have. Okay, so evaluating cyber risk is a common-ish question where basically you're asked to evaluate what risk we have in relation to a specific decision or a strategy from a perspective of cyber risk, okay? And the answer that you give is going to be very much dependent on the scenario that you get. So we're going to run through some potential questions that might kind of put some context on this, okay? Dealing with the cyber attack is a little bit different. So we've had the cyber attack occur and now we have to deal with it. The way this has been tested in the past is through scenario planning. So in the past, there has been a ransomware attack. So, ransomware basically locks the computer, locks the system, and to unlock it, you have to make a payment, normally in cryptocurrency. And in the case of dealing with a cyber attack, and let's say you have a ransomware attack, you have different options you could pursue in that case. And that type of question has come up before. Do we make the payment to the cyber criminals? And if we do, I mean, what are the implications? Well, they see us as an easy target. They might come back and do it again. They might not actually unlock the system, right? Other options might include alerting the police. Okay, we alert the police and then the cyber criminals activate their encryption software and they lock out the whole business out of, confidential secret files, and it causes mass disruption. What happens if we just ignore the cyber criminals? That could be another option that we'd have to evaluate, and that actually came up before in the exams. Now, as well, you could have a more generic situation where we have a cyber attack and we have to kind of deal with this, potentially putting in some measures and maybe even using a cybersecurity consultancy. Now, mitigation is another one. Okay, so how do we mitigate? How do we prevent this from occurring? So you could have, for example, firewalls, training, penetration testing, software like antivirus, a SIEM, threat intelligence feeds. Okay, we have all of these mitigation methods. Strategic management of cyber risk. How should cyber risk be managed from a strategic perspective? So when we think about cyber risk, if we're looking to manage it from a strategic perspective, we need to think about things like how is cyber risk positioned within the business? Okay, so do we have a dedicated department for cyber risk within the business? Do we have a director that looks after that department? What about resourcing? Do we have a budget for cyber risk? How does cyber risk interact with risk reports? Is it on the principal risk report that we have that's available to external parties? That these are all the things that we would consider in terms of strategic management. Now, non-financial reporting is kind of a hot topic these days for CIMA. And I see there's actually a query that came in. Amazing timing, right? Someone just asked about integrated reporting. Yeah, so integrated reporting is coming into the exams more and more and more these days, okay? And it's something that's quite important because sustainability reporting, I mean, we even see it within the pre-seen document. There's a bit of a hint there. I mean, we see an extract from a sustainability report. It's the first time we've ever seen this in a pre-seen. So that theme of sustainability, I mean, we see it with CIMA, AICPA, they're always putting stuff out on LinkedIn around sustainability. So it's a hot topic for the Institute, okay? What I would suggest in terms of integrated reporting, the integrated reporting framework gives us the overall principles that we have to basically abide by when we put together an integrated report. An integrated report is just a report that sets out how a company has created value. So it's not just looking at financial performance, but it does look at financial performance, but it says, okay, the business is not just there to create profits, it's also there to create social relationships. It's also to improve intellectual capital. It's also there to improve the environment and protect the environment. These are all the different factors that an integrated report would take into consideration. So in terms of the style of questioning that comes up, normally it's around the impact that something will have on the capitals, which are the areas that we need to look at in terms of what has been affected by the business, okay? So the framework, the integrated reporting framework, one of the components, the content elements as it's called, is the impact on the capitals. Now, there's 6 capitals within the syllabus, but interestingly enough, in the real world, you don't have to use those capitals, but there's 6 within the scope of the syllabus, and you basically have to make a determination as to how different events could basically affect them. Now, questions in the past have always given you the capitals. You then have to give a determination as to how they have been affected, okay? That's a very standard question. How does, for example, the cooperation with the university on the development of a battery impact the intellectual capital and the human capital and the social relationship capital of the business? Okay, that kind of thing. Challenges in reporting. So there may be challenges in actually reporting impacts on different capitals. So, for example, if we engage in some lobbying behavior where we're trying to change laws or trying to maybe reverse a change to the ban that we have on ICE vehicles, that could have an impact on capitals in lots of different ways. So maybe it destroys some relationship capital, but it maybe increases it to a certain extent because we're keeping some stakeholders happy, we're increasing natural capital. I mean, you know what I mean? It can be quite difficult to make that determination as to how a certain action can affect capital. Sometimes it's not as basic as just, yeah, it increases it, okay? So the next one is improving information. So you may be presented with a series of disclosures or maybe a series of measures, and again, you have to improve them. We touched on that within core activity B. It could come into core activity B or core activity D, okay? It kind of teeters between the two. Sustainability claims, so again, improving measures or looking at the adequacy of disclosures. So trying to comment on them and say, are these adequate enough? Do they actually accurately represent the business and what it does, okay? There is a dichotomy with this type of business where, yes, it is good for the environment, but it's not perfect. And I think that's sort of insinuated within the precinct that it's not a perfect business in terms of its sustainability credentials. It does have an impact on the environment. And that's something that could be critiqued within a scenario. That could be the theme of a scenario. The fact that the business kind of purports to be a very sustainable business. But actually, when we look at it, I mean, it has a lot of problems from a sustainability perspective. And that's touched on a little bit within the pre-scene, okay? Hopefully you got that when you went through the pre-scene. So the risk reports, okay, this is something that's really interesting here. So the risk register is a really simple topic. If it comes up in your exam, okay, typically it's quite a simple one. It just requires you to understand what it is, okay? So basically a risk register is like a database of all the risks that the business faces, okay? So it is effectively a spreadsheet that contains detailed information, and that information is contained within the business. So the risk register would not be given to an external party, okay? It would be contained within the business for internal use. So what information would you have? You'd have the risk owner. It's not standardized, but this is some of the information. The risk owner, who looks after this risk. We also have the date it was identified, the mitigation actions, the risk score, which normally is a factor of the materiality, and as well the probability of occurrence. Okay, so you would have all of those. You would have the date it was last updated. You would have the lots of different things you'd have. Okay, so again, it's not standardized. I mean, you could have lots of different details. You need to understand the purpose of the risk register. So again, it's to kind of log all these various different risks and to have owners associated with the risks. And, it's basically a way of recording them, managing them, and so on. The details, it's highly detailed. Okay, so it's a highly detailed report. Again, it's typically a spreadsheet. And in terms of the reporting criteria, we're looking at all of those various different details that I called out. Okay, so risk score, description, owner, date identified. Now, the principal risk report is the one that you have within your precinct. This is very different. The principal risk report is externally focused, so it is given in the annual report typically. So the shareholders or potential shareholders would be able to see this, and as well stakeholders like pressure groups, unions, the government, employees, they can all see this as well. And what this details is the most material risks that the business faces. That's why it's so small, because it just is aimed at the most significant risks that the business faces. Okay, not every single risk, the most important ones. And that is so important, because if you get a question that asks you, should we report this in our principal risk report? Well, you need to understand what this report is actually for in order to answer that question properly. That's why I say the theory is important. often people say, oh, the theories is not important for the SCS. It's like the exam is just like based on experience. Like it's not. Like you do need to know some of the theory, right? And trust me on that, okay? So it is important to understand to understand what this report is for. So it's the most material risks, and then high level, i.e., broad based mitigation actions for those risks. And you see that within the principal risk report. If you go into the pre-scene, you can see that these are like really general, not that detailed, they're highly significant. And something to consider if you do get a question on it is, if we were to add a risk to the principal risk report, there is a chance that if it isn't that significant, you could dilute the importance of the other risks. Okay, so think about that. You could end up diluting the importance. You could end up sort of saying, well, okay, the report has some risks that are actually not that important on it. And that then kind of dilutes the overall importance of that report. Ethics is super important, right? I cannot stress enough how important it is. Please make sure you understand that if you go through our question pack, if you go through our mocks, our assessments, ethics is all over it, okay? Because it's very likely to be tested. So what do we need to know? The principles. So integrity, really, really, really important, okay? So integrity is basically looking at being straightforward and honest in business and professional relationships, okay? Objectivity, so these come from the CIMA Code of Ethics, by the way. Objectivity means acting free from bias and the undue influence of others. Professional behavior, okay, so complying with laws and regulations, and as well not engaging in behavior that would damage the reputation of the business. Confidentiality basically means keeping information confidential unless you have a professional or legal obligation to disclose that information. Professional competence and due care means acting diligently. So what I would suggest, and this is something that has come up in our WhatsApp group, right? We have some people who are really super duper on the ball. When the examiner's reports came out, and I think this person is watching this live stream, a comment that was made, and it's something that I've said all the time, is when you get questions around ethics, pick the principles that are relevant. Don't pick all of them, okay? Unless they're all relevant, right? So that's my advice. The examiner has said that over and over and over. High quality answers tend to pick the ones that are the most relevant, okay? Don't try and be like a superhero trying to pick out the niche ones and, pick out ones that you think, oh, well, no one else will have this, therefore I should have it. Like, pick the most obvious ones, the most relevant ones, okay? That's the way to succeed when it comes to ethics. Now, you may get a different style of question, and don't freak out if you do, okay? So, typically questions will ask, okay, what's the ethical implications of this action? And you basically have to weigh up this scenario against the different principles, okay? You may get a question that asks you, what are the ethical arguments for and the ethical arguments against? If you get a question like that, don't worry. Basically, what you need to do is you need to look at the ethical arguments for and consider the principles that back that up. So if it's consistent with, let's say, integrity and objectivity, they'll be in my for category. And if it's against professional behavior and confidentiality, then I'll put those in my against bit. So it's just a different way of categorizing your answer. Don't freak out if it comes up in your exam. So internal control, a lot more straightforward than the other areas. Typically, the question will just ask you to recommend controls. So here are some suggestions. Physical controls, things like barriers, turnstiles, locks, safes, authentication controls. So we use these every day. Two-factor authentication. I mean, do you guys use like the face scan on your iPhone, or if you go to your bank, sometimes you have to like get an SMS message, put it in. Two-factor authentication. It's basically validating that you are the correct person. You can use those in a business context as well for the SCS. Access controls. So access to different folders, files, access to software. Personnel controls. So controls around recruitment, selection, training, employees. Software controls. So basically ensuring that software that we're using is valid, okay? So that is something that could come into a potential scenario. I know it seems a bit weird, but it could. Network controls, so controls around a company's network, okay? So things like a firewall. Right. Evaluating and managing risk, I have to be honest with you, this is like a catch-all for all the other kind of loose ends within this area. So foreseeing risk, you may get a question that asks you around whether we should have foreseen if a risk should have happened or could have happened, or something has basically happened and we're being examined on whether it would have been realistic for the board to have expected that to happen. Should they have had a better mitigation plan? And of course, the answer is going to be very dependent on the scenario. But what I would suggest, if you do get a question like that, try and consider, would it have been reasonable for the board to be able to have identified this risk? Okay, so if it's something that is very unexpected, I mean, there is a degree to which you could suggest that actually the board, it would have been unreasonable for them to have identified this, okay? However, what I would suggest is try to use some of the precedent to back up your argument. So if it's the case that, let's say it's a risk like the batteries inside the vehicle setting on fire, that to me seems like a risk that, yeah, they should be aware of, okay? That's reasonable. I mean, it's a potential risk. I mean, it's a serious risk. You should be aware of that as a board, right? And let's say, for example, we look at the principal risk report and we see no evidence of safety-based disclosures. Nothing related to batteries, nothing related to operating the vehicles. Well, that might suggest that actually it was oversight that played a role in that case. The risk manager, so the role of a risk manager, this came up before, the answers were terrible. Basically, a risk manager is someone who looks after risk at an operational level. So they identify and they manage risk. And they also have the role of looking after insurance providers and ensuring compliance with the law. And you may get a question around the advantages and disadvantages of appointing a risk manager. That may come up in your exam. Risk ownership. So this is coming into the exam a lot more. It was actually quite an old theory, an old kind of question, but now it's kind of coming back a little bit. So with this, basically what is being examined is, should an individual director take ownership over a risk, or should the entire board take ownership over a risk? So really the answer to this is that it depends, okay? So when you give one director ownership over a risk, well, it's very clear who's looking after it. So accountability is very straightforward. However, it may be the case that the risk is related to multiple different areas within a business. It's multifaceted. And if that's the case, then maybe the whole board should be looking after it. Okay, so again, it depends on the risk. Evaluating risk. So you may get questions around, like, very broad questions. What is the risk in this particular case around expanding overseas, acquiring a mine, for example, implementing new technology? What are the risks? Like, it's kind of a very broad-based question, but it has kind of come up before in the past. You may get an equally broad question that asks you to manage risks. Okay, so what I would suggest is, when you're evaluating risks, talk about the main ones, talk about the big ones. When you're looking at managing risks, sometimes you need to consider the following. It may be better just to accept it instead of mitigating it. Of course, not always. And you will need to make sure that your management strategies are tailored to that specific risk as well. Okay, some potential questions. So we'll kind of speed through these. I know you probably want to go to bed, so I have to be kind of mindful of that. So we have our various different areas, and we're going to look at some potential questions based on them. So cyber risk. So evaluate the cyber risk associated with the release of a new update that provides autonomous driving features. Okay, so we could have an interception in that case. You could have, let's say, cyber criminals intercepting the signals that are going to the vehicles, and hey presto, they basically launch a load of malicious software into various different vehicles. Evaluate the claims made by a cybersecurity consultancy firm. So you may be given a list of suggestions that a cybersecurity firm has for the business, and you have to challenge them. What I would suggest is trying to relate these back to the actual cyber attack that has occurred in that case. So if, for example, they have like loads of technical measures and then the actual cyber attack was related to social engineering, then you need to mention that. And you can say, well, look, the technical measure is certainly useful and helpful, but if they can be overridden by staff and staff have no training on these types of issues, then that's a problem. Okay. Evaluate an acquired charging infrastructure provider cybersecurity in relation to privacy and availability. So you need more information really to answer this question properly, but what I would suggest here in terms of availability is that this is all about uptime. Okay, so what we would look at here is, what do they have in terms of cybersecurity that maintains that, and then the privacy aspect is, what do they do that protects that private information? And they likely do have private information if they have individual customers purchasing with their credit cards and so on. Recommend how battery research using a local university will impact accumulators' capitals. So, normally the question will not be this vague, but you're thinking about the various different capitals, social, relationship, intellectual. These are kind of the most obvious ones for that one. And then you're discussing how they're either increased or decreased, okay? Recommend the ways in which accumulators' capitals can be repaired following a cyber attack. So let's say, for example, there's a cyber attack, and then we have to consider, okay, what capitals do we have, and then how could they be repaired? How could they be addressed? The issue that we've just had, how could that be remedied? So in the case of, let's say, social relationship capital, for example, you may have to reach out to individual stakeholders that were affected by that cyber attack and say, look, these are the mitigation strategies that we have in place to prevent this from occurring again. Evaluate the challenges in reporting the impact that lobbying efforts on new ICE bans have had on accumulators' capitals. Okay, so what would make that challenging? And we talked about that a little bit, in terms of social relationship capital, we may end up kind of damaging some relationships, but also improving some. And I suppose that kind of creates a bit of a challenge. I mean, have we actually increased our social relationship capital, or have we decreased it? We're kind of in a nil position almost. So risk reporting, evaluate the board's rationale for leaving cyber risk off the company's principal risk report. So there may be some rationale. Possibly they left it off because they felt like it was going to draw attention to the business. Cyber criminals were going to look at it and say, oh, okay, well, if the company is highly reliant on its systems, then they seem like an attractive target. However, we have to consider the fact that a cyber criminal is likely to look at a broad range of factors, not just the public disclosures of the board. Recommend the extent to which movements in individual interest rates should be disclosed in the risk register. So this question came up before, but more so around currency rates. What I would suggest in this case is it's probably not realistic to have every single currency or interest rate movement listed within the risk register. If, for example, we're a global business and we're impacted by, let's say, 20, 30, 40 interest rate movements, it could kind of clog up the risk register unnecessarily. Remember, a lot of this could kind of be consolidated because we have the treasury team likely looking after this, so there's a unified risk owner. What you could do instead is you could maybe have the most material ones being disclosed separately and then the remainder disclosed as kind of a catch-all, okay? Evaluate the argument that the risk of batteries failing should have had on... Evaluate the argument that the risk of batteries failing should have had a higher risk score in the risk register. So this came from the SCS prototype exam. So the very, very first SCS exam was not actually ran. It was a prototype. So it was released to the public to give an idea as to what the SCS would look like. And it had some interesting questions on it. And this was one. Basically, it's saying, should this not have had a higher risk score? Okay, and the risk score is comprised of the probability of occurrence and as well the materiality. Okay, so the arguments there, it's going to depend on the risk, but you could say it's easy in hindsight to look back and say, yes, this should have been ranked differently. But of course, the risk score is an arbitrary measure. It's not an exact science, okay? It's not like we're using like mathematics to kind of calculate it, any sophisticated mathematics. It's a very, very, very simple way of looking at it. Okay, so ethics is another one. So evaluate the ethical issues associated with releasing an autonomous driving feature with no laws in place first. Okay, so this is an ethics-based question that I believe we have actually in our question pack. So I'm not going to spoil it. Okay, so if you look at our question pack, we have some information in relation to that question. It's a very, very difficult question. Again, what I would suggest is going through the relevant principles and evaluating the full scenario against those principles. In this case, we don't really have enough to kind of make a determination, okay? So evaluate the ethical implications of lobbying the Duxon government to introduce EV tax credits. This theme of lobbying has been tested at least twice within the SCS exam as an ethics-based scenario. And I believe the reason is because people tend to have their own personal opinions on lobbying, and they want to see, are you able to make an objective determination as to whether this is appropriate or not, and not use your personal opinion in that answer. Evaluate the ethical arguments for and against the reverse engineering of a competitor's innovative battery design. Well, what I would say on this is that it's not really in alignment with integrity, because it's not very honest to purchase a product and then go home and reverse engineer it. It may be against professional behavior, because we might be violating patents if we're looking to adopt the technology that's used in that battery. It may be in alignment with objectivity, because it might be the way in which the company maximizes shareholder value. But again, we need a lot more detail to really make that determination. So internal controls, recommend the controls that should be in place to prevent the recurrence of a cyber attack. So things like training is a very common one, penetration testing, very common one. Evaluate the effectiveness of the controls recommended to prevent the leak of confidential design documents. So there may be a series of controls, and then you have to evaluate their effectiveness. Again, that's going to depend on the controls that you've been presented with. recommend controls to mitigate the safety risks associated with removing the batteries from accumulators vehicles. I mean, this is mentioned within the pre-scene a few times, the danger associated with removing the batteries. And what I would suggest here is that you could have controls around safety equipment, making sure that safety machinery is being tested regularly, that staff again are using things like helmets, and that kind of stuff is likely to be the answer there. In relation to questions around recommending controls, they don't always have to be super sophisticated. They just have to be related to the scenario. The next one, evaluate the argument that Anna Pohl should own the risks arising from accumulators driverless vehicle features. So what we're saying here is, should Anna Pohl be the sole person responsible for this risk? And you could say yeah, because if you think about it, right, one person being responsible for a risk, it's very clear as to who's accountable for that, okay? However, on the other side of the argument is that in this case, there might be a multifaceted aspect to it. So yes, maybe Anna Pohl's remit is over this particular feature, but what if the feature is only possible through manufacturing the cars in a certain way? Then we may have another director that should be involved in this. It's only fair, right? Evaluate whether the board should have identified and mitigated the risk of its lithium batteries malfunctioning. Okay, so should it have identified and mitigated the risk of these batteries malfunctioning? And the answer there is probably yes. Okay, so again, we need a bit more background, but it's something that is not really within the principal risk report, which does suggest a degree of maybe misjudgment, because to me it seems like a significant risk for the business. When these batteries go on fire, it's very hard to put that fire out because it's an electrical fire. So the next one, evaluate the risks associated with centralizing all research and development activities in a new overseas entity. Okay, so one potential risk there could be a lack of cost benefit. Okay, so it could be the case that we have to transferring people from other divisions and so on, and maybe there's a cost aspect to that because we're sending them to somewhere else. And possibly the idea behind the centralization activity is to drive cost benefits. Maybe it's in a low cost country and so on, but actually by the time we transfer all the people over, we pay them a premium to do so. Maybe some of them leave. It could end up actually costing the exact same, and there's no real benefit associated with this. So let's go through worked examples. So this morning, Alice Whalen, the head of quality, has identified a fault in accumulators lithium batteries. So the fault relates to a large batch of lithium batteries used in the accumulator scorch model. So Alice claims that there is a low probability that the fault could lead to batteries setting on fire mid-journey. Okay, so that's a significant risk. It doesn't matter if it's low probability. Based on an initial review, it appears that the battery fault is contained to the identified scorch batch. Okay, so there's a batch that we've identified with this fault. Some board members feel that the issue should be kept confidential until more information is gathered. Okay, evaluate the ethical implications of keeping the fault confidential until more information is gathered, and this is worth 40%. So what I would suggest in this particular case is I would have 3 principles that I would discuss against this scenario. So I would look at it and say, okay, is it consistent with this? Is it not? Okay. And in this case, we're going to give you 4, but I would, suggest 3 is probably enough if you can write a good bit on them. Okay. So the first one I'm going to look at is integrity. So integrity, what is it? It involves being straightforward and honest in all professional business relationships. Okay. So in this instance, the decision to keep this fault confidential, at least temporarily while we carry out this investigation, it's against the ethical principle because it's not exactly straightforward. It's not exactly honest. We know that there's a fault. We know that there's a risk. We know that it's a serious risk. And we're basically keeping that information hidden for no clear reason, okay? We know that there is information that is important, that relates to a significant risk that our drivers or our motorists are entitled to know because it's going to possibly lead to injury. It's a very, very serious issue. And keeping the information hidden at this point, it's not transparent. It's not straightforward at all because we have the information. We're just obscuring it for no real reason. Okay, so we would say here that a further investigation, it's going to delay the delivery of this information unnecessarily. It's against integrity. Objectivity. So this involves not compromising judgment due to bias, conflict of interest, or the undue influence of others. Really, whether objectivity is being exercised here, it depends on the motive for keeping that fault confidential temporarily until we kind of find out more information. If we look at it, there's no real sound reason. There's no reason as to why we would need to gather more information. We have the specific batch there. So it could be, we could kind of draw the conclusion here, and I think that's how I would phrase it within my answer, that it seems like there is a possible delay tactic being used by the board to protect their professional relationships, because, or their own sort of reputation, I suppose, because there's no clear reason as to why you would do this. Okay, it kind of seems like it's not really being made on an objective basis. Okay, professional behavior. This is probably the most obvious one. So, professional behavior involves compliance with regulations, and as well, it requires the board to avoid actions that would damage the company's reputation. So, failing to disclose this known fault, I mean, it's going to likely, if it does occur, it's going to cause damage to the passengers, the driver, possibly nearby citizens, and it's reckless. Okay, so not disclosing this is reckless from the company's perspective. I mean, it's likely against regulations, and the lack of action on this is going to be a reputation damager. Okay, so this is going to be likely a very, very serious problem in terms of reputation. The next one is professional competence and due care. So this basically involves acting diligently. So the decision to delay the release of the information, it doesn't seem to be a diligent decision. Okay, so it violates this principle, because if the delay is action and the batteries do catch on fire, the subsequent reputation impact could be severe. And if you think about it, a more prudent approach, a more grounded approach, would be to basically recall the vehicles that have had the fault occur. I mean, that's the most clear and logical and likely the most beneficial course of action to pursue. The action that we're pursuing here really doesn't make any sense. It's not that diligent, and it's likely the case that the cost of a recall is going to be far less than the cost of the lost goodwill or reputation damage as a result of this decision to delay. So I'm going to get a bit of water here. What do you guys think of that? Core activity D. We only have one more and then we can all go to bed. So I see here there's some questions that I hated risk management. I forgot I forgot Tara in a prime place to put it. Yeah. Still passed my MCS, but honestly it was so obvious that I should have suggested the Tara framework, but time and exam previous that went to toffee. Can you talk about the integrated reporting framework? Yeah, we went through that. That was a good one. Yes, you did. You shared this. Yeah, so there was some commentary in the group around the use of the principles, being selective with the principles. Yeah, and it was really around being very careful and being discerning with what principles we actually use. Okay, so we probably have another about half an hour in this, guys. I can see the attendance is just insane for the amount of time that we've been running. Just so you guys know, to keep the attendance going is very, very difficult on these live streams, because this is not the most exciting subject matter, right? So if I was playing Fortnite or something, maybe it might be a bit different, but yes, it's a sort of a difficult one, you know. The activity D and A are my favorite. Yeah, A tends to be everyone's favorite, really. I know it's kind of, the questions are a little bit more strategic. I think people at this level, most people are able to kind of understand the strategic aspects of the business. And I think it's more interesting. The ones that cause the most amount of issues tend to be E and B. Okay, so B is the big one. B is the one that causes the most amount of problems, to be honest. But E does cause people a lot of issues as well. So how are we all doing? Do we feel like we're ready for another core activity, and we can get stuck into this one? I'm conscious of the recording. I don't want someone just looking at me drinking water, but my voice is destroyed from doing tons of recordings today. So this is my sort of third session today. All right, guys, we'll get stuck into this one. And look, if there's any questions that you guys have, you have my WhatsApp number there in the corner, my business WhatsApp. Do text me, don't ring me, because I need my sleep, right? And some of you guys are based in time zones where, I'll probably be asleep. So Australia, for example, or Malaysia, or China. All right, guys, let's go. Okay, so we have core activity E, right? This one is a tough one, right? This is a tough one. It causes people a lot of issues. And what tends to happen is people get really focused on the corporate governance aspects of the pre-scene. And then when it comes to the exam, their knowledge of corporate governance tends to kind of falter a little bit, okay? So core activity E, it is recommend and maintain a sound control environment. So it has 3 assessment outcomes. I can apply internal audit resources, very straightforward. I can recommend appropriate controls and evaluate the implications of compliance failures. This one really is around the control environment. And the last one there, I can recommend responses to the threats arising from poor governance. So this is about corporate governance, okay? So the key theory that we need to be aware of here, okay? So I've laid it out already, okay? So I thought your attention spans might be a little bit lower, so I've kind of just put it on the screen there so you don't have to wait too much for it. So internal audit, right? Internal audit is the first area. And to be honest with you, this is a major problem area for most people because internal audit is normally tested at a 50% or 60% type of question, okay? So 60% type of question is the biggest type of question that you can get in the SCS in terms of the amount of marks that you can achieve. And a lot of people that have, CIMA qualification or are trying to get their CIMA qualification sorted, they probably don't work in internal audit. I mean, they could do, of course, they could do, there's many people that do, but it's not the most popular profession for people who are CIMA qualified or pursuing the qualification. So it's unlikely that a lot of people sitting this exam will have a lot of personal experience that they can work with. You may do. If you do, fantastic, but it tends to be a problem area for people. So the good news is with internal audit is that there tends to be 2 different types of questions that are examined for internal audit. The first is the work that's performed by internal audit. So possibly there is an assignment that they have to work on and you're asked, okay, what work would they perform as part of that assignment? So some suggestions, things like interviews. Okay, so they interview different people. They ask them, okay, the work that you're carrying out, is it in alignment with the, let's say, the standards that have been set? Are you aware of the standards? It's a great way of testing whether training has been effective. Asking questions and kind of seeing, okay, does this person actually know what this training is all about, and have they actually understood the content? Observations, so just observing things. Okay, so just seeing, okay, let's say, for example, we're investigating quality control and we're just seeing, okay, are staff actually carrying out a quality process that's a part of the overall, let's say, production process for our vehicles? Confirmation, so typically checking things with another party. So if you've ever worked as an auditor, you'll know that you typically have to get bank confirmation statements from various different banks when you're checking the bank balances for a company at the end of the period. And this can be like a really tedious task. Basically, you're checking to see, okay, the balance that's reported within the company's financial system, does that match back to the balance that they have given us? Okay, so confirming the balance. Okay, you could also confirm software licenses. That's another one. Reperforming, so reperforming a task to see do you get the same output. So do you reperform a calculation and get the same output that the company got? Okay, and that then is kind of a test to see, is that an effective calculation? Let's say it's something like a reconciliation. Okay, checking, so checking to see has something been done. So for example, maybe we have an internal audit investigation into the effectiveness of training, and the first thing we do is we check and see, okay, has the training actually been actioned? Have people actually attended? The next is the use of internal audit. Okay, so is it appropriate or is it inappropriate to use internal audit for a certain type of assignment? And how you answer this question is you look at the assignment and kind of consider, would it be a good idea for internal audit to work on this? And what are some potential reasons why it might not be a good idea? So in terms of the camp that says, yeah, it's a good idea, you need to consider the fact that internal audit typically have skills in the area of investigation, checking balances, reviewing, and so on. So they may have the skills for that particular investigation. As well, they typically are independent, okay, even though that independence is limited, and that plays a role, okay, so that's a good thing. They can act objectively. And in terms of the negative side of things, well, you could say that they typically work to an annual audit plan, and if they engage in these ad hoc investigations, that's going to result in that audit plan being pushed back, or it could create an excessive amount of pressure on the internal audit staff, and then they end up kind of having lower quality work as a result of that. Okay, as well, sometimes extremely technical matters, they may not have enough knowledge on that technical area to actually carry out an effective investigation. The use of the audit committee. Okay, so I think this could come up in the exams where you are asked, what role does the audit committee have in relation to an internal audit? The audit committee would approve of this audit. Okay, so if it's an ad hoc one, they would approve of it. They would look at the timelines, they would look at the resources, the assignments. They would basically approve it. They would be there throughout the duration of the assignments, and they would act as an advisor, I suppose, to the chief internal auditor. They also close it out. Okay, so they would receive a report, they make an evaluation on it, and then they close it out if they feel like it should be closed out and possibly further investigated if that's the determination that they make. And as well, what they also have, if you think about it, is they have this role of giving information to the rest of the board about what just happened. Okay, so they kind of give some information to the rest of the board in relation to internal audit. Now, the board committees is another one. This one typically is a big problem for people. So, the risk committee, what do? They are there to identify high level risk facing the business. They also review risk management systems, they review reports related to risk. They're all about risk, okay? Then we have the nomination committee. So the nomination committee basically assists with nominating executive directors to the board. Remuneration committee set the remuneration or the pay effectively of executives and the senior managers, okay? The audit committee, basically they have the role of evaluating the performance of the internal audit function. They play a big role in selecting the external auditors, and they also monitor the integrity of the financial statements. So they have a big role. Now, with the audit committee, if a business does not have a risk committee, the audit committee will perform that role. Okay, so that's really important to note there. Now, within the exam, we actually have a unique situation. It's never happened before. We have a risk and CSR committee. You probably, when you read that, you were like, what is this? Basically, this is the first time it's ever happened. So you could see a situation where, I don't know, maybe there's a split off between those two different committees. And that's something we'll talk about in a few seconds. But just talking about alternative committees, you may have a situation where we actually form a new committee, so a technical one, a technology related one, possibly an ethics one. And when you think about it, like the benefits of creating new board committees based on these types of topics is that it sends a signal that that's an important area for the board to consider. And it's an important area for the business overall. So if you created a technology one, I mean, that shows that technology is important for the business, right? But also, if you think about it, if you create these committees, there can be a potential for overlap with other committees. So, for example, an ethics one could really overlap with a risk one. And that creates a bit of conflict, like which one is more important? Which one do we actually listen to? Now, for the first time ever, I think you could see a question on splitting a committee. So the CSR and risk committee, splitting it so that there's a CSR committee and then a risk committee, okay? So why would we do that? What would be the benefit of doing that? Well, if you think about it, it allows those issues to be discussed in a more concentrated way. So we would have a dedicated CSR committee that's likely going to cause CSR to be a higher priority for the business. You know, that could be a potential upside. But of course, we're going to need more non-executive directors if we have effectively a new committee, okay? So governance issues. So you could have a situation where you add more board members. This is super, super common within the SCS exam. I don't know if it'll come up again because it does come up a lot. Adding a new executive and adding a new non-executive. So what I would suggest, if you add a new executive, one of the implications of this is that there is a cost implication, okay? Because executives tend to be paid at a very, very expensive rate, okay? We all know that. I mean, that's such a stereotype, right? And the other side of it is that if you have an executive being appointed to the board, we have to create a specific area for them, which may result in an existing director losing an area that they look after. So you end up with a process of restructuring, and restructuring can be costly, time consuming, not that productive, conflict creating, and so on, okay? The other side of it is that if you do have a new executive, it does create an enhanced strategic focus over that area. So if you have, for example, a chief technology officer that's looking after technology, well, it's likely that technology is going to become a more discussed issue at a board level, and it's going to be looked after a lot better, okay, in terms of being reviewed at a strategic level. Now, non-executives, if you add a non-executive to the board, you increase the amount of challenge, you increase the amount of power, I suppose, that the shareholders have in terms of being able to manage things like division of responsibilities, and there's not this concentration that the executives have on the board. There's this kind of oversight presence, okay? So it kind of helps shareholders in that perspective. Now, something to note, and I just want to make this really clear, when we appoint a non-executive is not that expensive. Okay, so the average salary, I believe, of a non-executive director in the UK, I'm not based in the UK, but I believe it's about £80,000 a year. So for a business like Accumulator, that's like a needle in a haystack. It doesn't mean anything. So the cost is not really an important consideration for a non-executive. There's kind of a misunderstanding often when we see questions being answered on this. They say, okay, cost is a big consideration. Often it's the case that either a non-executive is paid a flat salary that, I mean, it's a nice salary, 80,000 is not bad, right? But it's not, hundreds of millions, is it? And the other side of it is that sometimes they're paid like a flat fee for the number of meetings that they attend. Okay, so they might be paid like £2,000 for a meeting. So, corporate governance considerations. Here are the themes that tend to come up. Okay, so the questions tend to be based on the following themes. So, effective leadership, risk. Okay, so risk is kind of a governance issue. Controls, are controls being adhered to or not? Acting with integrity. Okay, so this is another type of theme. Okay, did this person act with integrity at a board level? Stakeholder engagement, are we engaging stakeholders? Again, kind of key governance issue. And remuneration, that's another one. Okay, so remuneration is another one as well. So basically pay for directors. Okay. Control environment, not tested that much, but important to be aware of. So impacts on the control environment. Just so you're aware, control environment is the attitudes towards controls within a business. Okay. And where you have an effective control environment, people take things like ethics seriously, they take things like controls seriously, and you end up with a better run business. So impact on the control environment, you could have, let's say, a new strategy that's introduced and there's an impact on the control environment and you have to evaluate that. Maybe the dismissal of a director, or maybe some type of behavior from a board member that's a bit questionable, maybe bribery or something like that. How does that impact the control environment? Implications, so consequences of a poor control environment. Okay, so what happens if you have a poor control environment? Well, if you don't respect controls that much, you increase legal risk, you increase fraud risk, you have a worse run business, lower quality, that kind of stuff. Evidence of a poor control environment, questionable attitude to ethics, lack of commitment from the board in relation to internal controls and ethics, controls not being adhered to, lack of corporate structure. Okay, so having no clear roles or corporate structure. So let's go through some potential questions here. So internal audit, evaluate the appropriateness of using internal audit to review Accumulator's sustainability report. We'll go through this in a second. Recommend the work internal audit could perform to ensure battery designs are kept confidential. So think about it, right? If you're keeping something confidential, you're likely to keep it in a secure place. So they would check, for example, the physical controls around that design. Okay, so let's say it's a paper-based design. They would test and see, okay, is there a turnstile? Is there a keypad that's required? Is that effective? Who has access to it? And so on. Evaluate the implications of using internal audit to suggest cyber risk disclosures for Accumulator's principal risk report. So this type of question has never come up before. It's an interesting one. So what are the consequences of getting internal audit to suggest the disclosures for cyber risk? I mean, to a certain extent, yeah, I mean, they're probably going to come up with some good ones because they're involved in investigating, various different things associated with, let's say, the controls around cyber risk. So possibly they would come up with some good disclosures. But if they are ever asked to review the risk report, well, they run into a self-review threat and they may not be able to do that effectively. So board committees recommend the role of the audit committee during an internal audit investigation into safety controls. We went through that already. Recommend the factors the remuneration committee should consider before technology director is appointed. So they would consider things like what's being paid in the market, what is appropriate for the experience and skill level that we're looking for. What about things like goals related to bonuses? Okay, so what should they be based on? Evaluate the governance implications of splitting the risk and CSR committee into two separate committees. So we kind of touched on that already. Governance issues, so evaluate the arguments for and against the appointment of a non-executive director with a background in cybersecurity. So we talked about this, but this question is just kind of enhancing maybe the range of things that we can talk about. If, for example, it's someone with a specific technical background, it may be tempting to say, yeah, and we can to a certain extent in terms of the arguments for it. We can say, yes, okay, I mean, it's great to have that expertise at a board level. However, we need to be careful here because we don't want a situation where this person is deemed the expert in this particular area. We don't want them to be operationally responsible for cyber risk or cybersecurity because that's not really the role of a non-executive director. The non-executive director is there to challenge the board, to ask questions, to investigate, to basically question, is this an effective strategy? What's going on here? Are you really, as a director, performing the way in which you should? Like, they're there to ask those difficult questions. They're not really there to look after a specific technical area. That's more the role of an executive or a senior manager or maybe a third-party consultant. Evaluate the argument that board members should be paid more after an acquisition occurs. Okay, so that's an interesting one. After an acquisition occurs, should they be paid more? I mean, to a certain extent, yes. I mean, they have more remit, they have more responsibilities. If they're not paid more and they're raising this as an issue, they may be more tempted to leave. We have to keep them motivated. However, the other side of it, often it's the case that board members, executives have things like share options. They would have things like equities, warrants, and they would increase if the extra responsibility that they have is actually generating shareholder value. So that kind of takes care of that to a certain extent. Okay, you could also say that possibly if they have an increased amount of responsibility, that could warrant actually employing a senior manager or another executive. Okay, rather than just increasing pay. So evaluate the implications of changing executive bonuses so that they're linked to the achievement of sustainability targets. You could get this question as well. What I would say here is that yes, it's going to increase the amount of focus, so that's a consequence there on sustainability, which is a good thing for a business like ours. However, another consequence of this is that there may be conflicts between profit seeking and improving sustainability credentials, and they could become conflicted, okay, and that could be a problem for the board in terms of keeping our shareholders happy. Control environment. So evaluate the argument that a recent quality issue with the batteries that we have is evidence of a poor control environment. You will need the full detail there to make a determination on that, okay? Evaluate the implications for accumulators control environment of a director's dismissal following a quality oversight. Well, if it was a oversight where possibly there was negligence, where possibly it was deliberate, to try and maybe massage figures or something like that, well, you could argue that that shows that we're taking control seriously and actually it will improve the control environment. Okay, that's a consequence. Another consequence is that if you do have a, let's say, an executive director that's been dismissed over this, well, there will be kind of a period of time where we don't have an executive looking after that area. Remember, we talked about the fact that we need that structure there for a good control environment. Well, it could lead to a lack of leadership in that area, and that then damages the control environment. So the last one there, recommend how Accumulators Board could sustainably improve an acquired lithium mines control environment. So implementing things like reporting structures, having clear and defined roles, training on things like ethics, training on things like controls, ensuring that there's alignment between the internal control systems of both companies, okay? So let's go through our last example here, okay? So I know you're all probably thinking, please finish up. Okay, so Accumulator Sustainability Report has just been published, showing results for the year 2025. Results appear to have improved, but markets have reacted negatively, unexpectedly. An article is released criticizing Accumulator and how it reports its sustainability performance. The article notes that measures are easily manipulated and have been inconsistent over time. The board want internal audit to review the report and provide an appendix stating the results of the audit. The question says, evaluate the appropriateness of having internal audit review the recent sustainability report. Okay, so this is a really, really tough question, and this would stump a lot of people, okay? So it's good that we're covering it now, right? If you get something like this in the exam, you should be sorted. So what's happening here? Okay, we have the sustainability report, there's criticism over the measures, and basically the suggestion that the board have is that internal audit should review the report and provide an appendix, basically like a summary saying the results of the audit. Evaluate the appropriateness. If you're asked to evaluate the appropriateness, what I would do is I would look at whether it's appropriate and whether it's not appropriate to have internal audit review this report. How did I come up with that? In this situation, my knowledge of internal audit says that actually I can pick up some clues here that suggest that yes, they would be useful to a certain extent. On the other hand, though, maybe it's not the appropriate department to look after this. Okay, so remember our exam advice, you have one paragraph for every 10%. So that brings us up to 6, and then we deduct off 1, that gives us 5. And then the second piece, which people often ignore, is you need to split your answer with the requirements. Okay, so in this case we have 2 requirements. We're going to look at the arguments for it being appropriate and the arguments against. Okay, so let's look at the arguments for. So if you're looking at the recording of this, just pause it. You can tap your space bar and it actually pauses it for you. And try this yourself, okay? Don't spoil it. So, why would it be appropriate? Well, think about the signaling effect, okay? Think of the message that it sends. So if we engage internal audit in this particular task, it sends the message, demonstrates that Accumulator is taking this issue seriously, and it also shows that they're taking stakeholder concerns seriously. And that's important. It's showing that we're going to address the issues that are being raised. Now, internally within the business, it's also sending a signal that this particular area of the business is important and it's worth getting right, okay? So it's showing management that actually we're going to be looking at this in close detail, okay? It's not something that we don't care about. We're actually going to have enhanced oversight now over it. So that should lead to a situation where management are more careful about the selection and preparation of the measures that they use in the report. The other side of it is independence. So a kind of a supporting argument here is that internal audit have a degree of independence, which is useful in this case. So it will lead to an objective review, okay? And that's going to give an assessment that is free from bias, okay? If you think about the operational staff that we have that, would probably be involved in putting this report together or these measures together, they're not going to have an objective perspective on this because they're basically reviewing their own work. Okay, so internal audit in this case, there's an argument there that it is appropriate to use them for this task. And the independence gives some reassurance to stakeholders that the findings will be unbiased. However, we're showing our critical thinking skills here. We're saying there's limitations to this independence. Okay, now the skills. So another argument for the appropriateness of internal audit being used for this task is that they have the right skills for it. If you think about internal audit, they're experts in investigations, checking assertions, analysis, reviews, and so on. And the review of the sustainability report, what's it going to involve? It's going to involve looking at the claims, the measures, the validity, and that's very much in line with the work that internal audit do. So yes, it would seem appropriate. We've even given an example here. They could carry out something called analytical review, where they're looking at a change in balances, a change in the measures over time. That would give us some indication as to whether the measures are accurate and whether they're showing a correct story, okay? Now, the inappropriate side, we're talking about the audit plan. We touched on this in the theory piece. We said that typically, internal audit, they work to an annual audit plan or periodic audit plan that would be approved by the audit committee. And if we have, for example, this ad hoc review being approved, well, that's going to cause some capacity issues because realistically, there's only so many internal auditors and there's only so much work they can do. So engaging in this could push that audit plan back, which is a problem because often it's the case that external auditors use the information that internal auditors have worked on throughout the year. So that could create a problem. Now, if it's the case that it's not pushed back, then we create, pressure on our internal audit team, and that could then reduce the quality of their work. Effectiveness as well. So you could argue that the internal audit review in this case is ineffective in actually addressing the fundamental issues that have been raised because to an extent, the market reaction and the follow-up article, it kind of suggests the issues with the measures already. So you could argue that using internal audit resources in this case is pointless because the issues have been raised, right? So it's up to us to fix the issues rather than just reviewing them. Okay, so the external market has kind of done this for us. They've kind of raised their criticisms with us. So internal audit's ability as well to review the report, it might be restricted because of its limited knowledge of sustainability issues, okay? So it may be therefore more appropriate to use an alternative party to review this. Credibility is another perspective as well. So, whilst they have some independence, it may not be enough to satisfy markets on this issue. So internal audit cannot be completely independent as they are employees within the business. So yes, they're as independent as they can be, I suppose, within this context, but it's not 100%. They are employees. So if the results of the internal audit report show that there's no issues, everything's perfect, well, there may be this perception that this is biased, okay, because they work for Accumulator. Stakeholders may prefer to have the measures reviewed by an external auditor, a third-party consultancy, and some won't care at all, okay? They will have no change in opinion as a result of this. So that wraps up the crash course for this window. We do 2 a year and this one was massive. I want to say thank you so much for joining me for this one. And if you guys have any questions, I'd be happy to address them for a few minutes. I do want to make sure that we kind of make this somewhat a reasonably length recording. It's quite a long one as it is. So yeah, I just want to be kind of mindful of that. Um, So I struggled to come up with options for internal audit. Yeah, for to do with risk. Yeah, I know what you mean. Yeah, yeah. I mean, the thing with internal audit is like often it's the case that the answers are actually more simple than you think. So try to think about what internal audit could do to check the goal that you've been presented with. So if it is like, for example, checking to see have files been secured, or are they kept confidential and so on. I mean, think about the types of work that they would do in that case to make sure that that is the case. So they would look at things like physical controls. They would look at things like, okay, who has access to these on a file drive? Is it possible to take these files out of the system and bring them home on a thumb drive? Is it possible for someone to email them to someone externally? Internal audit would look at all those things as part of that assignment. Is it possible to break this recording into activities and sections? It sort of is. No, thank you. Yeah, so what we're going to do is we're going to, you can actually timestamp it. So in the comments, there will be timestamping, but it takes a while for the video to render sufficiently for timestamping. But in the comments, I can put timestamps where you basically just click on the bits and then that'll skip to the relevant core activity. Charles, no problem at all. Yeah, no problem at all. Guys, I want to say thanks. The attendance was insane. I'm hoping this gets a ton of views. I love doing this type of stuff. And at the beginning, you probably heard some fireworks. I do apologize for that. It is Halloween here. There's not much I can do about that. We try and use AI to reduce the background noise, but there's only so much you can do. Things like fireworks are very loud. And of course, we have a dog as well. So it kind of stresses them out a little bit. But hopefully, we manage that as well as we can for recording this long. I'm coming into the SCS after a long break. Did the strategy pillars, would going through the course be enough for my revision? Um, yes, it would be. Yeah, yeah. I mean, the course is a standalone product. You don't need anything else to pass the exam. What I would suggest is that it it depends on you, right? Like, I mean, the course is only as good as your ability to use it, if you know what I mean. Like, if you're not using the assessments and the mocks, the course is of limited use to you. So you need to work with us on the course. I will help you as much as possible to pass this exam, but you need to engage with the course. You know what I mean? I'm not going to say it's like a magic wand. It would be wrong for me to say that, right? So you need to do the assessments, the mocks, take our feedback on board, study the materials that are there. If you do that, you'll probably pass the exam, right? You've a high chance based on the pass rate the last time around. Wow, thank you so much, guys. I really appreciate it. I really, really appreciate it. Thank you very much for your help. It was really good. No problem at all. And look, feel free to send this to your friends. You can send it anywhere you want. You can send it to your enemies if you want. I don't know. You can put it anywhere. I appreciate. I see some familiar names. I don't want to call you guys out in case you want to stay anonymous, but I really appreciate your attendance and your support is so important to me. So I really, really want to say thanks for that. It means a lot to me. Thank you so much for all the time and material you provide. No problem at all. Don't worry about it. Look, if you don't buy anything from me, it is what it is, right? I'm not gonna chase after you. I mean, I love just doing this. I love putting myself out there, and if this is of help to someone, great. You know, it's good energy, right? It's good karma, maybe. That can be the payment, right? Um, okay, guys. Well, I think there's no real questions. So what I'll do is I'll turn this off and then, look, if there's anyone that wants to follow up with me, you have my WhatsApp there. I'll try my best. It is a little bit late, but I'll try my best to get back to you. I do have to have dinner, so I might be a bit slow to get back, but I will. Okay. Your queries are important to me. And yeah, so I think that's the right time to close this off. But look, thank you very much for watching this, and we will see you in the future. And hopefully, you pass this exam. I mean, I'm absolutely rooting for you. Please give it as much as you can over the next few days, weeks, whichever. There's not that much time, but there is a chunk there that you can use in November. Really give it everything you can. Like, I mean, I probably worry more about people's results than some people themselves, right? Please, really take this serious because you just want to do it once and get it done. You know what I mean? Just knock it out and get it done. You don't want to be going back doing this again. If you do, it's no big deal. But the ideal situation is you just clear it this round and you go into the new year fully CIMA qualified and, better job, better position, better pay. I mean, like the benefits are so clear, right? I mean, I've been there and I've done it. I got a better job when I qualified, so I know all about it, right? All right, guys, we'll talk to you, and thank you so much for your attendance. I really do appreciate it, and have a nice night. And if you're watching the recording, thanks so much for watching the recording. Of course, it is important to kind of shout out the people, the recording watchers as well. All right, thank